because talk can only really anchor the front end. So I'll be certainly watching for how does Chair Powell frame the QE program? Is it just about market functioning? Because if that's the case, Treasury market's functioning just fine. They can stop QE here. I don't think that's the right policy. I think that's going to result in a big rise in rates. So the action will be needed. Now, the Fed every week does buy treasuries. I think they retain that flexibility to buy as much as they want, as much as is needed, as where on the curve. But I think we do want to hear some talk that's helpful for the long end as to how they're framing it. I think suggesting that we don't want longer term rates rising will tell us that the Fed will buy as much as needed to keep that long end anchored until we know that the economy can handle higher rates. So I wouldn't discount talk entirely.
Brilliant work, as always, and always enjoy catching up with you. TD Securities Head of Global Rate Strategy, ahead of that Fed decision. Priya, send my best to the team, won't you? Tom, forward guidance. It's the big issue right now, and also the objective of monetary policy. I just want to touch on that because you and I discussed it yesterday. The idea that they can try and say this is just about market functioning, as you and I talked about, they've gone way beyond just market functioning. The market's functioning just fine. How do they pivot from that? What does the next phase of policy look like? They're the questions for today.
Well, this is very similar to the financial crisis, that everybody was worried about the markets blowing up and hedge funds blowing up. But, markets function through all this, and markets are functioning now, clearly voting for some form of recovery. I don't know how the Fed dovetails with that, John. I would suggest they're going to remain calm and they're going to remain cautious today, even as they play with the dots.
I would agree with that, Tom Keene. A little bit later in the program, we'll be catching up with Neil Dutta of Renaissance Macro, more constructive on this economy through the downturn and into the reopening. Does the data support it? So far, the economic data does. That is coming up next with equity futures just about turning positive on the S&P 500. From New York, this is Bloomberg.
Now let's see what else is going on around the world. Here with the latest headlines is Amy Morris. Good morning, Amy.
Good morning, Tom. American shoppers started spending at closer to normal levels again last month. U.S. retail sales fell 5.6% in May from a year ago. The study from MasterCard Spending Pulse says it's an improvement from the 14.1% drop it recorded the month before. A little more than 2 weeks after his fatal encounter with police in Minneapolis, George Floyd has been laid to rest in Houston, Texas. Texas Representative Sheila Jackson-Lee spoke at that service.
His assignment turned into a purpose, and that purpose was around the world, that there are people rising up that will never sit down until you get justice.
Floyd's brother, Philinus Floyd, is going to be on Capitol Hill today. He is one of 12 people to testify before the House Judiciary Committee about national police reform. Now, a day after his funeral, his brother will be on Capitol Hill. He's one of a dozen people scheduled to testify at that hearing on policing policies and law enforcement accountability. A fundraiser for likely Democratic presidential nominee Joe Biden has brought in more than $3.5 million. That event was co-hosted by Senator Kamala Harris, widely believed to be on the short list as his running mate. Live from the Bloomberg Interactive Broker Studios, this is Global News 24 hours a day on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Amy Morris. This is Bloomberg.
Not completing high school is more of a social thing than it was an academic thing. I came out in the 11th grade. Nobody was embracing you. The kids were cruel. It was very difficult to be gay. Even though all these years have passed, I still had that longing to have my diploma. The hard part was determining that I was going to do it, but I definitely didn't do it alone.
At age 30, with the help of her mentor, Carissa finished her high school diploma.
I have a mentor, Maria. She convinced me to continue my education and to finish what I started to get my diploma. Just never judges. She's a true role model. If you're even considering getting your high school diploma, go get it. You can do it.
No one gets a diploma alone. If you're thinking of finishing your high school diploma, you have help. Find free adult education classes near you at finishyourdiploma.org. That's finishyourdiploma.org. Brought to you by the Dollar General Literacy Foundation and the Ad Council.
Asset managers who seize change to launch new strategies, add distribution channels, or exploit new technology to re-engineer the investor experience are often rewarded. However, in an industry paralyzed with complexity, few act with agility or decisively. Few run their business strategically. Yet, the most competitive managers in the market know with the right partner and a flexible operating platform, you can. Go boldly toward change with SEI Investment Manager Services.
I'm Steve Meyer, president of SEI's Investment Manager Services. At SEI, we understand the emerging forces that will define success for asset managers and what firms will need to compete tomorrow. That's why we continually optimize SEI's global operating platform. If your business requires greater agility, our advanced technology, integrated best-in-class systems, and multi-asset expertise can be your catalyst for business transformation.
With SEI Investment Manager Services, you lead the charge in a competitive marketplace. Learn more at SEIC.com/seize change.
Influential conversation.
For the friendships, for the fresh air, for the space to grow. For the knowledge, for the sport, for the outdoor education, for the wide horizons, for the academic excellence, for the future. Unleash your child's education at West Buckland School, a co-educational day and boarding school in beautiful North Devon. If you're moving to the southwest for a better quality of life, this is education without compromise, in what the Good Schools Guide called a gem of a school in an exceptional location. To see for yourself, find us at westbuckland.com.
This is a message from the government about the emergency measures to support the economy during the period of disruption caused by the coronavirus. To help you, your business, and your workers affected, you can apply for cash grants, business rate holidays, statutory sick pay relief packages, as well as the coronavirus job retention and self-employment income support schemes. For information, go to gov.uk/business-support now.
People's Postcode Lottery's 30k a day is back. £30,000 will be won every single day by players in the July draws. That's £30,000 for every player in the winning postcode. Visit postcodelottery.co.uk/radio before midnight on the 18th of June to play in the July draws. PPL managed lotteries on behalf of good causes. 16 plus conditions apply. Play responsibly.
No, not the time to worry about inflation. Right now, you throw everything you got at the virus. You hit it, you kill it, you win the war against the virus. You throw everything in terms of finance, in terms of budget resources, in terms of health resources, because the sooner you beat the virus, the less expensive the recovery will be.
And how they threw everything at it in the last few months. That was Angel Gurria of the OECD from New York City this morning. Good morning. Alongside Tom Keane, I'm Jonathan Ferro, together with Lisa Abramovich. This is Bloomberg Surveillance Live on Bloomberg TV and on Bloomberg Radio, getting you in shape for the market day ahead of us with a Fed decision on deck. Your market shaping up as follows. In the equity market, we advanced by 2 points on the S&P 500, up by around about 0.1%. Outside of that, the bid stays in. The bond market, Treasury yields coming down 3 basis points on a 10-year, just south of 80 basis points on a 10-year maturity in the Treasury market. Just a little bit of curve flattening, yields lower in the last 24 hours off the back of some real steepness and a push higher in Treasury yields over the last few weeks. Outside of that, in foreign exchange, just to get you up to speed on that weaker dollar story, weaker against everything in G10, with the euro advancing once again, Tom, with the Federal Reserve decision later this afternoon down in D.C.
Well, the Fed decision, absolutely, John. I want to mention that Angel Gurria was the most fired up I've ever seen him as we talked about his Mexico and Latin and South America absolutely crushed by the pandemic. It has been extremely difficult in South America, particularly Chile. Right now on the Fed, as John mentions, we need to speak to an optimist. Neil Dutta has had great acuity about being more optimistic about the American consumer, really, than anyone else we speak to. And he joins us now on this Fed Day. Neil, we had a great jobs report, a huge surprise. Clearly the vector there is better. We'll get claims tomorrow. Maybe that will show a continuing improvement from the horror that we're living through. Are we going to do the same dance with GDP? Are we going to underestimate the ability to recover? And are we going to hear that from the Fed today?
Well, I think yes and no. I mean, I do think the consensus is a little bit too negative at this point on, the second quarter growth numbers. I mean, as an example, you look at the Atlanta Fed as an example. I think it's like tracking minus 50% annualized for the second quarter. But we already know that in May, taking the input from the employment numbers, aggregate hours worked probably went up in May by about 65% at an annual rate, which means that, doing the math, I mean, it would take a lot to see that kind of number actually happen in the second quarter. So we're going to get a better number than what the consensus is currently estimating for Q2. I think the jobs number makes that clear, and we'll get more information on that as the weeks go by. But for the Fed, there's absolutely no reason whatsoever for them to sound upbeat. I mean, inflation is low. Risk management suggests you take a more of a cautious approach. You sort of err on the side of doing more. And so I think while we've seen some tentative signs of improvement, the Fed's not even close to declaring victory. And, I think what we're going to see today is, them sort of continuing to sort of signal that they're going to anchor the front end of the yield curve and keep rates low for a long while.
Neil, how comfortable do you think they are with what's happening further out in the curve on a 10-year, on the 30-year, just relative to where yields were several weeks ago? We've clearly had a repricing higher. Do you think they're comfortable with that?
I mean, I think so. First, I mean, if you look, I will say, Jonathan, I mean, if you look at the minutes, right, I mean, there doesn't seem to be much support on the committee, and this is a consensus-building institution. There doesn't seem much support for targeting interest rates 10 years out the curve. I mean, if you look at Bernanke's blog post on targeting interest rates, I mean, essentially they said that they were going to go, 2 to 3 years out. So, I think longer-term interest rates have picked up a little bit. I mean, and the reason they have is because growth expectations have picked up a little bit because the data's improved. So, it's not immediately clear to me that that's something they need to be concerned about. And, of course, they're looking at broad financial conditions, right? And so, even as longer-term interest rates have picked up, we've seen the dollar has come in substantially. It almost looks like it's sort of back to where it was pre-crisis. If you look at your Bloomberg Dollar Index, sort of a broader measure, we know that high-yield CDX has come in quite a bit. Commercial paper spreads have normalized. So I think the Fed isn't just looking at longer-term interest rates. They're looking at broader financial conditions, and broader financial conditions, I think, at this point are conducive to growth again.
Neil, I want to talk about financial conditions because Sean and Tom were talking about this earlier. We've gone way beyond market dysfunction. At this point, it is the Fed propping up asset prices, keeping a lid on yields. How much is this the main driver of the rally that we're seeing in equities that is broadening out? And how much are traders counting on this behavior continuing of the Fed propping up asset prices in order to continue making bets on, say, the Russell 2000?
I definitely think the Fed has your back, but we also know, monetary policy can't permanently inflate the level of asset prices. We talk about the equity markets and the economy and financial conditions. Obviously, there's a circular feedback loop between all of these things, right? So a strong economy means better financial conditions and so on and so forth. But if you look at when the market bottomed, at least equities, it basically coincided with a turn in the economy about 2 to 3 weeks later. Which is what you would expect to see, right? So, of course the economy is better than where it was when the markets bottomed. Just look at mortgage purchase applications today, Lisa. We're up double digits year over year. So purchase applications, a proxy for home buying demand, that's up 13% year over year. I mean, that's activity. We know more people are, we obviously see motor gasoline demand up. So certain industries are seeing very sharp recoveries, like housing. Other industries are not seeing sharp recoveries. But I do think that, that the economy is in a much, much better place. And, right now everyone's talking about these sort of second-order effects from, potential bleeding at state and local governments. And, but there are second-order effects from the momentum turn in the economy and the recovery in housing as well. And so I just think people need to keep that in mind. I do think that the recovery in the economy and the recovery in markets actually are frankly telling you the same thing.
And Neil, you've been brilliant over the last month, and we really appreciate your guidance. A more constructive view that has certainly paid dividends in this equity market and beyond. Neil Dudder there of Renaissance Macro. Tom King, we have had some positive surprises from a range of industries. We've had some guidance from Macy's. We've had some guidance from American Airlines. We've had some guidance from the retail wings of big Wall Street institutions suggesting that this reopening is delivering some positive upside surprises.
Right. Well, there's all these indicators. I'll give you one indicator, John, ensconced here as I am in the flight path of LaGuardia. I had one, I had two, I had three planes go by last night for the first time in ages landing in LaGuardia. That's a good sign.
I've got to say, plane watching might be your thing, Tom. Train spotting might be another thing. That's a big thing in the UK. I think that would suit you well. From New York City this morning, good morning. This is Bloomberg Surveillance Live on Bloomberg TV and radio.
Business is constantly evolving. Is your financial printer evolving to keep ahead of the curve? At Command Financial, we are redefining financial printing by providing industry-leading expertise, leveraging technology, and honing processes and best practices. Every day, Command helps SEC registrants, as well as members of their working groups, including securities attorneys and investment bankers, prepare, file, and disseminate regulatory and disclosure documents, such as registration statements, M&A documents, and mutual fund prospectuses and reports. Command provides a full range of services to help you effectively complete your deal, meet your disclosure requirements, and achieve your shareholder communications objectives. Visit our website at commandfinancial.com and learn how we're evolving, not only with the times, but also with your business requirements. Command Financial, redefining financial printing.
Elite advisory firms rely on BNY Mellon's Pershing to meet the needs of their most complex clients. Karen Novak, Chief Operating Officer at Pershing Advisor Solutions, explains how.
At BNY Mellon's Pershing, we bring customized insights and strategies to help you grow your advisory business and stay on the leading edge. We can support the needs of your most sophisticated clients with a full range of investment and wealth management solutions, from access to private banking to consolidated bank and brokerage custody. Learn why so many of the largest advisory firms turn to us for the financial strength and high-touch service that BNY Mellon's Pershing can provide. Are you well positioned to stand out from your competition?
Learn more at Pershing.com or call 800-445-4467. Brokerage custody provided by Pershing LLC and other services provided by Pershing Advisor Solutions LLC. Both members of FINRA and SIPC. Private banking and bank custody provided by BNY Mellon NA. Member FDIC.
For the friendships, for the fresh air, for the space to grow, for the knowledge, for the sport, for the outdoor education, for the wide horizons, for the academic excellence, for the future. Unleash your child's education at West Buckland School, a co-educational day and boarding school in beautiful North Devon. If you're moving to the southwest for a better quality of life, this is education without compromise, in what the Good Schools Guide called a gem of a school in an exceptional location. To see for yourself, find us at westbuckland.com.
Can my employer change my contract?
Am I entitled to statutory sick pay?
What is holiday pay?
When can I take annual leave?
Is my employer allowed to change the hours I work?
How do I raise an issue with my employer?
Right now, it's important to know your rights in the workplace. At ACAS, we're here to help with free impartial advice. Visit us today at acas.org.uk/rights at work.
If you can build that flat-pack wardrobe without looking at the instructions, you've still got it. If you can manage 5 keepy uppies on your first go, you've without question still got it. If you can toss a pancake to the ceiling and not let it hit the floor, surely you've still got it. And if you can just about fit into those jeans you bought 5 years ago, you've definitely still got it. Brute, still got it.
From New York City, this is Bloomberg Surveillance for our audience worldwide. We're live on Bloomberg TV and radio alongside Tom Keene. I'm Jonathan Ferro, together with Lisa Abramowitz, 2 hours away from the opening bell this Wednesday morning. Good morning to you all. With equity futures turning just a little bit negative, basically unchanged, down a single point on the S&P 500 going into that opening bell. We hit pause on this equity market rally with a Federal Reserve decision just around the corner. In the bond market, the yield curve was steeper into the close on Friday. It flattens going into the Federal Reserve decision. 2s, 10s coming down to about 60 basis points. That's the spread between the 2-year and a 10-year. Your 10-year yield coming down 3 basis points in today's session to just south of 0.8% on a 10-year yield. Outside of that, one theme that does continue this morning and over the last month is a weaker dollar against the bulk of G10, all of G10 on the session. Euro advancing several tenths of 1%. That is a stronger euro, a weaker dollar going into that Fed decision. And J-Pound news conference just around the corner, Tom.
Yeah, there's no question about it, John. I'm glad you mentioned euro. I was looking at that to go through 114. I don't know if it's going to get there. George Saravellos making very clear, John, at Deutsche Bank that he continues weaker dollar, maybe not that much strong euro, but definitely weaker dollar. He even framed out in one part of the conversation, John, a 120 euro. Can you imagine the challenges for Christine Lagarde with a 120 euro? I'm not saying he predicted that, but he framed out how you get there. Right now on this Fed Day, and we've got wonderful guests coming up, including Alan Blinder and our Fed show with Scarlet Food. Look for that at 2 p.m. This afternoon. But right now is a most interesting economist with his Iranian heritage. Mark Zandi has led the charge at Moody Analytics for years. He's out of the factory known as the University of Pennsylvania, and he wrote an incredibly prescient book 8 years ago called Paying the Price. Dr. Zandi, what's the price Chairman Powell's going to pay for the free lunch he's issued here? Down the road, there's got to be a price to pay. What is it?
Well, Tom, I don't. There's probably a price, but I think he has no choice but to go down the path that he's on. The economy is flat on its back. The pandemic continues on. The risks are very high. I don't think he has any choice but to be very aggressive here and likely get even more aggressive.
Mark, I agree totally with your analysis there, but there's got to be a price to a 9 trillion or whatever the number is going to be expansion of what we got. How do you, you're at Moody's where you're linking economics into credit rating, et cetera. What is the price to pay of this multi-trillion-dollar expansion?
Well, two things. One, he made use of asset prices, markets, equity prices, credit spreads, real estate values, and that ultimately may be a problem down the road if markets get overvalued, and particularly if they turn speculative. It's something that central banks and the Fed are always watching out for. So that's a possibility. The other is, obviously he's enabling a massive amount of deficits and debt, and eventually that's going to be an issue. This is something that's happening across the globe. Every government on the planet is borrowing very heavily to battle this virus, and that there is going to be a price for that. We're going to have some kind of sovereign debt issue on the other side of the pandemic. So he's enabling that, but on the other hand, he has no choice, because if he doesn't, the global economy, the U.S. economy evaporates, and the deficits and debt are even larger. He has no choice. It's a Hobson's choice. There's no really good choice here.
Well, Mark, let me follow up on that, because that's a big shout, a big call, that we could have some sovereign debt issues in maybe several years' time. And I'm trying to work out from your perspective, you think that could happen in developed markets, or is that a problem for elsewhere?
I think that's a problem everywhere. In developed markets, Europe is, obviously most at risk, but I think every developed economy is going to struggle to some degree. And clearly, the emerging world is already under tremendous pressure and needs help sort of navigating through. So I think this is going to be a global problem, similar to the European debt crisis on the other side of the financial crisis. Once it becomes obvious to investors that the global economy has been diminished by the crisis and debt loads are a lot higher, and the probability that they're not going to get paid in a timely way is greater, I think the same kind of dynamic is going to play out a year, 2, 3 down the road on the other side of this pandemic. And every country, including the United States, is going to be part of that event, that potential crisis.
Well, Mark, let's pin you down on that then. Define problem for us, because if you remind us of what happened in Europe, we're thinking about 6-7% 10-year yields on Spain, on Italy. You're not saying the same could happen in the United States, are you?
No, I mean, the U.S. is still in the enviable position that it's, the best, it's still the AAA credit on the planet. It's still in the best spot of any economy, country in the world. So things go bad anywhere, money tends to come to the United States, flight to quality, and that'll continue. So, no, I don't think that'll be the case. But I do think interest rates will rise to a point where it's going to put pressure. Well, first of all, it's going to allow policymakers to connect the dots between deficits, debt, and the economy so that they have the political ability to do something about it. But I do think eventually the pressure on U.S. policymakers will be that they'll have to engage in some form of fiscal austerity, pull back on government spending, higher taxes, all of the above. So pressure will come on the United States, but not the kind of pressure that other countries have come under in the past, and certainly not to the degree that Europe did back, in 2011, 12, and 13.
Mark Zandi, as chief economist of Moody's Analytics, you take a look at the economic data, which is turning up, and it certainly is fueling this optimism that we're seeing being priced into risk assets. It seems as though the pandemic is over, at least in the eyes of many people. People are not accounting for necessarily a second wave or some sort of resurgence, even though a lot of health experts are expecting that. What would a material second wave do to both the economic statistics and the bleed through, the response to that in markets?
Yeah, that'd be a big problem. I think you're right. I don't think markets are attaching much of a probability on a serious second wave, and maybe they're right. We don't know. Who knows? But I think a prudent investor planner would probably attach a higher probability to that possibility. And if it's serious, what that means is it's disrupting businesses. Now, I don't think we're going to see government shut down businesses again. I think we've been there, done that. I just don't think there's the political will to do that. But that doesn't mean that businesses can't get disrupted because consumers will self-quarantine. They're already got one foot in the bunker. They'll run back in. They'll stop spending. The economy will be disrupted. And, that is the fodder for a double dip. So, I think we're out of recession now. We're going to grow in Q3 because businesses are reopening. But on the other side of this, we could go right back into the soup. And so this would be kind of a W-shaped economic period as opposed to a V-shaped, which markets seem to be anticipating. And so if that W does materialize, then, obviously markets have some adjusting to do. The script on the bear market and equities and the narrowing in credit spreads that we've seen, all those things will come unwound and markets will get tested again.
Well, Mark, I sound like a broken record today because this really is my big question. I do feel like today it's heads you win, tails you win. If the economic data deteriorates significantly, you get markets expecting that fiscal and monetary policymakers will just flood the zone. They will do whatever it takes and they have more ammunition left. Why are they wrong?
I think they're misjudging the amount of ammunition the policymakers have. Central banks, still have policy space, but they can still, Fed has room to maneuver, but other central banks don't, or at least not nearly as much. And governments are, borrowing very, very aggressively. And at some point that is going to be a problem. They're not going to be able to go to that well so many times. So I think investors need to be cautious that policymakers can bail us out only so far. The other thing is, what may happen here if we go into the second wave, the thing that really would make it more lethal is that you see, a lot more bankruptcy, failure, default, foreclosure, repossession. So far we've avoided that. Because of the policy response. I think we're going to see some of that coming, as the policy supports start to wear off. But so far it's been relatively minor. Prospects of erosion here are not overwhelming. But a second wave, going back into recession, I think those credit problems become very significant, very obvious, And for investors, they just won't be able to ignore it, and policymakers won't be able to offset it.
Hey, Mark, great to catch up with you. Really interesting thoughts. Mark Zandi there of Moody's Analytic. The more pessimistic view compared to the more constructive view that we got from Neil Dudder of Renaissance Macro, Tom, just 10 minutes or so ago. On the second wave, the aggregate numbers tell a constructive story. The disparity here in the United States, though, state by state, is getting a little bit more interesting, Tom. Just some caution coming out of states like Texas and states elsewhere.
And no question about it, and you've seen it in the last 2 days in the major newspapers, the parsing of the COVID virus in these states, and it's not going well. John, what I found there that's absolutely fascinating is Dr. Zandi, who is an optimistic guy. Let me make clear, folks, Mark Zandi is known, like Dutta, as an optimist, but Mark Zandi talking about a double dip like we saw in the early 1980s. The massive difference, John, is that was a time of money illusion, of massive inflation, of the good feeling of high interest rates. It's not there now. I don't know how you do a double dip in the United States if you don't call it Europe, or dare I say, if you don't call it Japan.
That'll be a theme for us later in the hour right here on Bloomberg Surveillance Live on Bloomberg TV and on Bloomberg Radio. A little bit later on this program, we'll catch up with Ben Mandel of JP Morgan Asset Management on this market, which seems to be rallying much more on the good news than it sells off on the bad news. Right now in the equity market, we advance 3, call it 4 points on the S&P 500, up by around about 0.1%. In the bond market, the shape of things as follows for you. Over the last month, it has been about yields higher at the long end over the last few weeks, and a curve that's steep just a little bit. Over the last few days, we reflatten and yields come in on a 10-year down 3 basis points to about 0.8%. On a 30-year yield, 1.55% in the United States of America. Alongside Tom Keene, I'm Jonathan Ferro, together with Lisa Abramowitz. This is Bloomberg.
Now let's see what else is going on around the world. Here with the latest headlines is Amy Morris. Good morning, Amy.
Good morning, Tom. New Jersey Governor Phil Murphy is lifting that state's stay-at-home order, allowing larger gatherings, but he also took the time to remember those lost to COVID-19.
We've now lost a total of 12,303 members of our New Jersey family, and may they never, ever, ever, ever be just a number.
Gatherings indoors can be up to 50 people now, or 25% of a building's capacity. Outdoors, crowds of as many as 100 will be allowed. President Trump sparked outrage when he tweeted a baseless conspiracy theory about an incident last week when a 75-year-old protester was pushed by police, fell, and cracked his head on the concrete. The president claimed that protester, Martin Gugino, is an Antifa provocateur and that incident was staged. Gugino's friend Terrence Bisson says his friend has a history of being committed to nonviolent protest.
The White House has its resources that they can find out what kind of person Martin is. And to say that without having checked at all is a lie.
New York Governor Andrew Cuomo, meanwhile, says his state will pass what he calls the most aggressive police reform in the country, and that this is not just an issue for this moment.
It started with Rodney King. It started with the murder of Martin Luther King. This has been brewing for decades, if not centuries, in this nation.
New York lawmakers have already passed a repeal of a decades-old law that kept officers' disciplinary records secret. Cuomo says he'll sign it. We are live from the Bloomberg Interactive Broker Studios. This is Global News 24 hours a day, on air and on Quick Take by Bloomberg. Powered by more than 2,700 journalists and analysts in more than 120 countries. Much more still to come on Bloomberg Surveillance. I'm Amy Morris. Stay with us on a Wednesday morning. This is Bloomberg.
With the Bloomberg Business of Sports Report, I'm Charlie Pellett, brought to you by Grainger, offering supplies and solutions for every industry. Visit Grainger.com. The NFL and the Players Union have sent a planner to the 32 teams outlining procedures for the full reopening of their practice facilities, which were closed because of the coronavirus pandemic. In a 4-part memo to the clubs written by Commissioner Roger Goodell and approved by the NFL Players Association, the league described protocols focusing on screening, testing, and infection prevention and treatment for COVID-19, including response for new infections. No timetable has been set for the return of most players to team complexes. The Evian Championship Women's Major Golf Tournament in France has been canceled because of the coronavirus outbreak. Organizers say they cannot overcome, quote, uncertainty concerning the opening of borders with Asia and the United States. And that's the Bloomberg Business of Sports Report. I'm Charlie Pallett.
Jenny Liss, Jewish communal leader and philanthropist, talks about why she chose the Jewish Communal Fund for her family's charitable giving.
For a lot of people, it would be the convenience factor. I don't have to track anything.
If charitable giving is an important part of your life, JCF can help you organize your philanthropy with our donor-advised fund. A fund can be established with a minimum tax-deductible contribution of $5,000. Make grants to your favorite charities, and JCF handles all the administration and reporting.
At the year end, our board awards community grants from fees and endowment income to UJ's annual campaign. We also make gifts to specific organizations, the elderly, Holocaust survivors, the hungry. The fact that we come together as a community at the end of the year to build community, that's what makes us different.
Get better at giving back. To find out more about JCF's impact, visit jcfny.org and download the Giving Report. JCF, we have a gift for giving.
Global News 20. If you can build that flat pack wardrobe without looking at the instructions, you've still got it. If you can manage 5 keepy uppies on your first go, you've without question still got it. If you can toss a pancake to the ceiling and not let it hit the floor, surely you've still got it. And if you can just about fit into those jeans you bought 5 years ago, you've definitely still got it. Brute, still got it.
Picture this. Small businesses on eBay are working to
get things moving.
Sending spices to novice cooks.
Hairbands to kids.
Desks for home offices.
Delivering the goods.
Shipping footballs. Fruit trees.
And dishwashers.
Thousands of small businesses on eBay are helping to keep the nation going. They are individually brilliant, stronger as one. Buy, sell, eBay.
This is a message from the government about the next stage of controlling coronavirus with NHS Test and Trace. To protect your friends and family, testing and tracing must become a new way of life. If you have symptoms, you need to get a test immediately. Don't leave home for any other reason. If you test positive, we will contact you to trace people who you might have infected. From now on, if you're told you've been exposed to an infected person, you must self-isolate for 14 days. Play your part and do the right thing so we can safely return to a more normal life. Go to nhs.uk or call 119. Stay alert. Control the virus. Save lives.
They're going to slow down the pace to about 100 billion a month, coming down from 2 trillion in 1 month, because the markets have started to do their bidding. The markets have done their job by normalizing, and the liquidity they've added has really fixed all the liquidity in the system.
Bruce Richards there of Marathon Asset Management on the Federal Reserve's Herculean effort over the last several months. The pace of Treasury buying quite clearly rolling off in the last several weeks. What will they say a little bit later? The Fed decision very much in focus from New York City this morning. Good morning to you all. Alongside Tom Keene, I'm Jonathan Ferro, together with Lisa Bramwitz. We're live on Bloomberg TV and on Bloomberg Radio. In your equity market this Wednesday morning, just a little bit of a defensive posture captured by an equity market that is just about positive on the S&P 500, but your outperformance comes from the NASDAQ. You know the story? You've become familiar with it over the last several months. In the bond market, treasuries are bid, yields are lower going into this Fed decision later. Your 10-year yield comes down 2 or 3 basis points to around about 0.8%. But in foreign exchange, it's as you were. Take a growth currency, a big growth proxy like the Aussie dollar, 8-day winning streak, 8 days of strength on the Aussie into Monday. We took a break Tuesday, but it resumes again this Wednesday, Tom. That's a weaker dollar and a stronger Aussie, top of the pile in G10 this Wednesday morning.
First chart I looked at this morning, John, you nailed it. Aussie yen, which is one proxy. You can look at a number of them, Aussie renminbi, but it's really amazing to see that idea. Talking to Jeff Curry earlier with Goldman Sachs, he made very, very clear he's still long gold big time, and also mentioned a commodity renaissance there as well. We've been talking with lots of good, smart people on this Fed Day. Raghu Rajan of the Booth School will join us here in a bit. Alan Blinder at 2 p.m. We talked to the giant of imperfect knowledge economics, Roman Friedman, an hour or two ago. Guess what? They don't matter. What matters is what to do with your money. And Benjamin Mendel of JP Morgan Asset Management is going to tell us right now, because he is focused on the international markets. Ben Mendel, we've seen a great tech move, as Jonathan Farrell mentions. Great. When do we get the shift to a true renaissance for international growth stocks?
Well, international diversification may finally have its day here. We've been saying that for some time, and the argument has been threefold. One is that valuations in equity markets outside the U.S. are more compelling, in part because they underperformed the U.S. market for several years here. And two, the dollar is expensive, as you're mentioning, and that's poised to, at some point in the long term, go back to levels consistent with PPP. I think the problem with saying that in late cycle, as we were up until very recently, is that that's a tough argument, because as you roll into the recession, U.S. equities tend to outperform, and the dollar just gets stronger. And so what's happened over the last few months is that you're operating with a bit more of a clean slate vis-a-vis those late cycle valuations and the dollar, and I think you're starting to see that now. It's not obvious that the dollar moves back to its long run fair value soon, but I think the direction is clear in an environment where you've kind of growth is picking up. You're in early cycle, and you're seeing that kind of washout having happened.
Well, we've got to distinguish, of course, Ben, between whether the dollar weakness that we've seen recently is a symptom of the improving risk appetite or a driver of it. And I think a lot of people would say the former and not the latter. What would be your call, Ben?
We tend to think about the dollar in terms of relative growth, relative policy, and maybe the synchronization of growth. So there's definitely a sense in which everyone bouncing off of their growth lows in April is consistent with a dollar weakening in the short run. I guess the other thing is policy, and we'll see from the Fed today. I don't think anyone's as credible at pinning down short rates for as long as they're able to than the Fed, and so. I think that's part of it. But the risk rally, to your point, I think has to become a little bit more differentiated here. I don't think it'll simply be the case that all the early cycle winners will continue winning. So banks, value, cyclicals, you kind of have to pick your winners here. We like Europe and we like emerging markets. And the story with Europe, I think, will be reflected in part in the currency as well, where part of it is that they're will not be able to outmatch the Fed's ability in terms of forward guidance.
Ben, let's build on the Europe call, because I was looking today at the OECD projections that came out this morning for the economic downturn, and it looks like the European economies will be the hardest hit, in particular Italy, the United Kingdom, and France. But in the past month, Ben, to your point, you have seen European stocks outperform. What's being priced in, and what would be necessary both in the data as well as the stimulus front to keep this rally going?
Well, there's an inevitable V-shape in the data coming off of the month or two that we've just had. And so the fact is economies globally, labor markets globally, and corporate profits globally, importantly, are still in a state of repair here, and we expect that to be brisk over the next few months. So Europe is no exception there. I think the other aspect of it is banks. So banks are relatively bigger contributor to the equity index in Europe, and in an environment where the unemployment rate is falling is a good one for banks, and we'd expect that to be relatively well supported there as well. So I think it's sort of a combination of factors. But there's kind of a subtlety in the economic aspect, not just in Europe, but in the U.S. as well, which is that governments have been very good at socializing the losses on the part of households, and so they've kind of filled up that hole in income. In the case of the U.S., even more so than the size of the hole itself. I think on the corporate profit side, that's impossible to do completely. And the incidence of losses, so the distribution of those corporate profit losses across the operators, the banks, the landlords, and others is still very much up in the air right now. And the economic outlook is some complex function of that distribution of losses. And so I think, we like Europe here. I think it's important to kind of differentiate across the different regions, in part to hedge against the risk coming from that source of drag on the outlook from corporate losses.
Hey, Ben, great to catch up with you. Ben Mandel there of JP Morgan. I like Europe. Tom, how many times have we heard that over the last several weeks? I like Europe. I like Europe too, but for very different reasons. You've been burnt so many times if you've been buying Europe over the United States over the last several years. Yeah. Why does it change coming out of this pandemic?
And Ben Laidler, who's been dead on this market, John, Ben Laidler re-emphasized today the European banks. I mean, somebody who's been as good as Ben Laidler at Tower Hudson says, buy those European banks.
He's not alone. He's not alone, that's for sure. More still to come on Bloomberg Surveillance. Later in the next hour, the former RBI governor, Raghuram Rajan, on this program live on Bloomberg TV, on Bloomberg Radio. With equity futures positive 6, call it 5 on the S&P 500. We're up by 0.2%. From New York, this is Bloomberg.
For the friendships, for the fresh air, for the space to grow, for the knowledge, for the sport, for the outdoor education, for the wide horizons, for the academic excellence, for the future. Unleash your child's education at West Buckland School, a co-educational day and boarding school in beautiful North Devon. If you're moving to the southwest for a better quality of life, this is education without compromise, in what the Good Schools Guide called a gem of a school in an exceptional location. To see for yourself, find us at westbuckland.com.
This is a message from the government about the emergency measures to support the economy during the period of disruption caused by the coronavirus. To help you, your business, and your workers affected, you can apply for cash grants, business rate holidays, statutory sick pay relief packages, as well as the coronavirus job retention and self-employment income support schemes. For information, go to gov.uk/business-support now.
People's Postcode Lottery's 30k a day is back. £30,000 will be won every single day by players in the July draws. That's £30,000 for every player in the winning postcode. Visit postcodelottery.co.uk/radio before midnight on the 18th of June to play in the July draws. PPL managed lotteries on behalf of good causes. 16 plus conditions apply. Play responsibly.
If you can build that flat-pack wardrobe without looking at the instructions, you've still got it. If you can manage 5 keepy-uppies on your first go, you've without question still got it. If you can toss a pancake to the ceiling and not let it hit the floor, surely you've still got it. And if you can just about fit into those jeans you bought 5 years ago, you've definitely still got it. Brute, still got it.
There's a reason flash storage is called flash storage and not electronic non-volatile computer memory storage. From quick and efficient data retrieval to instant scalability, everything about IBM flash storage is fast. It's also cloud-ready and surprisingly affordable, with a recommended monthly price of £310 for 24 terabytes of all flash. Order by the 30th of June and pay nothing for 90 days. Find out more at ibm.biz/flash offer.
At Asda, we're helping you shop safely.
by keeping our stores clean and limiting customer numbers so you can keep 2 meters apart. With our Scan and Go mobile app, you can reduce contact at the till too. Asda, we're all in this together. Subject to availability, mobile data charges may apply.
To help keep you and your loved ones safe, TuneIn has the latest guidelines from the CDC. CDC says there are still precautions to prevent the spread of COVID-19. Wash hands often for 20 seconds and encourage others to do the same. Use hand sanitizer with at least 60% alcohol if no soap or water is available. For the latest stories and updates on COVID-19, search Coronavirus News on TuneIn.
Always talk about the losers in a trade war.
You benefit if you're just further away from China.
So that you can too.
What are the ramifications if she crumbles or doesn't crumble?
Bloomberg Radio, the Bloomberg Business, Radio.com, and iHeartRadio apps, and BloombergRadio.com. Bloomberg, the world is listening. From the financial capital of the world, 24 hours a day at Bloomberg.com, on the Bloomberg Business app, and on Quick Take by Bloomberg. This is Bloomberg Radio.
It's hard to imagine that we'd see a quick V-shaped recovery. I think it's going to be slow.
I think the data that we have in hand on the economic front do suggest a cyclical upturn in the third quarter.
Central banks, they did what they had to do, which is they're not trying to make life nice for the government.
The choice between lives and livelihoods is a false dilemma. The health and the economy go hand in hand.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrell, and Lisa Abramowitz.
Good morning, everyone. Jonathan Farrell, Lisa Abramowitz, and Tom Keene. On this Fed Day, it is Bloomberg Surveillance. We welcome all of you on Bloomberg Radio across this nation and worldwide, all of you working at home, and on Bloomberg Television as well. Thrilled that you're with us for good conversation forward to this important statement by Jay Powell, an update on how the Fed can help America. The backdrop here this morning is wonderful. Markets up. I'll talk to John Farrell about that in a moment. But what is so important is you need to be advised. Robert Miller will join us with BlackRock in a moment, and we are thrilled to bring you Raghu Rajan of the Booth School Chicago. He will join us at the bottom of the hour for a must-listen interview. John Farrell, against everything I see, what matters is yesterday, and reaffirmed just in the last 60 minutes this up for the stock market.
But a defensive tilt to it, Tom, with the outperformance coming off the back of the NASDAQ, with NASDAQ futures up by around about 0.8%. I didn't think we'd see a day like we saw in the last 24 hours, Tom, where you could have a down market and still see the likes of Apple, Amazon and Facebook up about 3%. That's the regime we're in. They are the defensive names now in 2020, Tom.
And what's so important there, John, Apple with rumors, speculation of product announcements through this year. And again, one of those signals, folks, of corporate America where life goes on. Lisa Abramowitz, you're going to be looking at the Fed today through the prism of what, 6, 7, 8, I've lost count, trillions of dollars of debt buildup. What will you listen for from Chairman Powell as Mike McKee listens to that press conference?
The focus right now very much on yield curve control. How much does the Fed want to backstop yields where they are? And I will say, Tom, interesting to see equity futures rallying and actually building on gains as we see bond yields falling, particularly on the long end. The 30-year and the 10-year Treasury yields going lower. I wonder how much the action today is really baking in the support of the Federal Reserve, coming out and saying, we have your back with respect to asset prices until this economy gets going again.
Let's get right to our guest right now. Bob Miller's with us, and what's great about this, folks, is I know Bob Miller has an entire bookshelf loaded with Fibonacci. He's read every Fibonacci there is, all 4,000. It's like Game of Thrones, folks. It's like 5,000 pages of Bob Miller reading Fibonacci. Bob Miller, you were at Bank of America. You've been running the ship at BlackRock, pushing a decade as well in multi-sector fixed income. Great. Have you ever seen this environment for fixed income? Is this new and the cliche, uncharted territory for the fixed income market?
Good morning, Tom. So
it's interesting. It depends upon your time horizon, right? So in my career, we've entered a new regime, but we have in fact done this before in the United States, and we've done it in other countries. And what I mean by that is I would argue we've crossed the Rubicon with respect to fiscal monetary cooperation, and there's no elegant way to go back. So the Fed has effectively surrendered its balance sheet to Treasury, and will continue to do so in order to do its part in helping underwrite a recovery of economic activity to full employment and their target inflation regime. But we have done this in the U.S. before in the post-World War II period, at a decade-long period of explicit yield curve control, where the Fed effectively, again, surrendered its balance sheet to the fiscal agent. And I think that's the regime we're in for the foreseeable future.
Bob, what you just said is so powerful, and you said it so diplomatically. I'm trying to work out what that means for the longer end of the curve. We know they are very able. Their ability is unquestioned to anchor the front end. I'm just trying to understand what they can do with 10s and 30s and whether they formalize that effort, not necessarily today, but in the coming meetings. What are you expecting?
I don't expect clarity today. I don't expect an explicit yield curve target regime. I think they're implicitly targeting levels of yields that accomplish what we just described, right? That accomplish very accommodative domestic financial conditions in a way that support recovery of economic activity, specifically toward full employment. The 10-year rate, you mentioned 10s and 30s. 10-year rate's important to the mortgage market. So I don't think they're going to allow the term structure of rates to rise in a way that becomes disruptive to the ability of good recovery, of full recovery in unemployment. I think the very long end is tricky. It's harder to control. Frankly, it doesn't matter as much to the mortgage pricing. So I could definitely see some steepening, but I think that instead of trying to pick a level for each point on the curve, I think the more important part of the discussion is to appreciate that the Fed will do what is necessary. In our opinion, they will do what is necessary to encourage very accommodative domestic financial conditions for the foreseeable future. And if we end up in a situation where yields are rising for the right reason, because economic activity is recovering strongly, the trend in inflation is back toward 2 and or perhaps even above, the employment numbers are rapidly continuing to improve, just like we saw on Friday. If we're in that regime where a rise in yields is viewed as healthy and doesn't dampen financial conditions, which means equity risk premiums continue to come down, credit risk, then that's nirvana. That's the best outcome. If you're at the Fed, that's the outcome you're hoping for, because the alternatives are kind of grim.
But for a lot of people right now, they might be screaming at the TV, screaming at the radio, wondering whether this is what the Fed should actually be doing or not. For programs like this, I think we spend far too much time on what the Fed should or should not be doing. Let's talk about what they are doing. That's what you're doing. If you have a price-insensitive buyer in your asset class, not just sovereigns, not just treasuries, but in credit too, can you talk to me about how the process has to change as an investor when you think about entering these markets and you consider valuations?
So, Jonathan, I think the most relevant, one of the most important developments in fixed income in the past 3 months is the fact that if we're right about treasury yields and they're going to be very low for the foreseeable future, the hedge effectiveness of treasuries in your portfolio that has been a dominant factor for portfolio construction and asset allocation for decades. Hedge effectiveness, defined as the ability to produce a positive return in a risk-off environment, has declined substantially, right? The Fed has effectively rendered the 5-year note at 38 basis points, with all due respect, kind of useless for my portfolios, the portfolios that we manage for our clients at BlackRock. As long as they're not going to embrace negative interest rates, which I do not think they will, or said differently, I think they're going to try everything else before they would attempt negative interest rate policy. There's just so minimal upside. Yes, treasuries are probably going to remain negatively correlated to equity prices. I get the correlation argument, but the beta or the sensitivity, the effectiveness of that hedge has declined. So the important thing for your question is if you no longer have that effective hedge in your portfolio or it's considerably less effective than it was before, you have to underwrite the other assets to their own absolute valuation. You can no longer depend upon buying somewhat expensive assets because you've got a really effective hedge in your portfolio as well. Now you have to own the assets at valuations that where they make sense on their own.
Bob, right now, if you take a look, for example, at high-yield bonds, you can question whether the valuations make sense on their own. Is what you're saying that fixed income is losing its purpose? Why not just buy stocks and hold a portfolio of cash to offset any losses?
It's a great question. We lean in that direction, i.e., having more equity than rate exposure in portfolios now, as you've heard from my colleague Rick Reeder recently. That said, within the fixed income market, there are still pockets of opportunity, specifically in the places that the Fed is not dominating, right, where the Fed is not intervening and bringing their hammer of, their ability to crush risk premium. So you've seen their activity it's only now starting in investment grade credit, but investment grade credit, higher quality has recovered substantially. But in securitized, for example, and in parts of the high yield market, there are still ample opportunities. There's still a real opportunity set for credit selection skill to generate alpha. So I'm quite constructive on opportunities in securitized, in CMBS, in CLO, et cetera, where the Fed is not influencing the overall risk premium in the asset class.
Hey, Bob, really important conversation and appreciate your time this morning. Our best to you, yours, and the whole of the team over at BlackRock. Bob Miller there on this bond market, and Lisa validating Tom Keene's cash position of the last 100 years. I want to get to this equity market and talk about the bankruptcy stocks, which have become an asset class of their own over the last week or so. Lisa and Bram, it's just a little bit of news on Hertz.
Yeah, Hertz received a notice of delisting from the NYSE regulators, which is not that surprising considering the fact that the shares have gained almost 900% since filing for bankruptcy in late May. Why? Your guess is as good as mine, John.
I think everyone's trying to work that out. Hertz will continue to be traded on the NYSE pending resolution coming from the company. The stock down in the pre-market. I know some people have actually been trying to trade this. The stock is down by just 5.5% on Hertz. That has been incredibly volatile. More still to come on that story from New York City this morning. Good morning to you all. This is Bloomberg Surveillance, and we're live on Bloomberg TV and Bloomberg Radio.
Now let's see what else is going on around the world. Here with the latest headlines is Amy Morris. Good morning, Amy.
Good morning, Tom. American shoppers started spending at closer to normal levels again last month. U.S. retail sales fell 5.6% in May from a year ago. That study from MasterCard Spending Pulse says it is an improvement from the 14.1% drop it recorded the previous month. Democrats in Congress have proposed a far-reaching overhaul of police procedures and accountability, even calling members back to Washington, D.C. to vote on it. Senate Republicans plan to come up with their own plan. Senate Majority Leader Mitch McConnell says the only African-American member of the Republican Senate will be the point person.
The best way for the Senate Republicans to go forward on this is to listen to one of our own who's had these experiences. He's had them since he's been in the United States Senate. And with his guidance and leadership, we're going to come together with a proposal that we think makes the most sense for the federal government.
Senator Tim Scott of South Carolina will head that task force. Likely Democratic presidential nominee Joe Biden wants to show that he is an ally for black voters in their fight against police brutality. He's come out in strong support of community policing and additional training for police, but has not voiced support for shifting funds for police. Still, he holds a lead in the polls over President Trump. 538 estimates find Biden with a 10-point lead over the president, putting him in a stronger position to oust an incumbent since Bill Clinton in 92. And the European Union plans a gradual and partial easing of a ban on most travel to the bloc as of July 1st. The current curb on non-essential travel is set to expire on the 15th, but they're expected to extend that. Live from the Bloomberg Interactive Broker Studios, this is Global News 24 hours a day on air and on Quick Take by Bloomberg. Powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Amy Morris. This is Bloomberg.
NJIT, New Jersey Institute of Technology, makes innovation happen. NJIT faculty mentored Christoph Camacho when he was a student, helping him co-found a startup and patent a device that uses drone technology for reforestation and to collect valuable data for land management.
I founded Paratrees back in 2016, taking what I learned from my research at NJIT and migrating it to a startup. Our technology is to really enhance land management operations. So we work very closely with land management companies. So we have a drone that performs precision reforestation, and we do storm damage assessment, having access to drones that can collect data so it's much faster. And what is more important, we help them drive management decisions. NJIT has been there every step of the way, going full force with my company.
NJIT, New Jersey Institute of Technology. Learn more at njit.edu.
Asset managers who seize change to launch new strategies, add distribution channels, or exploit new technology to re-engineer the investor experience are often rewarded. However, in an industry paralyzed with complexity, few act with agility or decisively. Few run their businesses strategically, yet the most competitive managers in the market know with the right partner and a flexible operating system, you can. Go boldly toward change with SEI Investment Manager Services.
I'm Steve Meyer, president of SEI's Investment Manager Services. At SEI, we understand the emerging forces that will define success for asset managers and what firms will need to compete tomorrow. That's why we continually optimize SEI's global operating platform. If your business requires greater agility, our advanced technology, integrated best-in-class systems, and multi-asset expertise can be your catalyst for business transformation.
With SEI Investment Manager Services, you lead the charge in a competitive marketplace. Learn more at seic.com/seize change.
This is a message from the government about the emergency measures to support the economy during the period of disruption caused by the coronavirus. To help you, your business, and your workers affected, you can apply for cash grants, business rate holidays, statutory sick pay relief packages, as well as the coronavirus job retention and self-employment income support schemes. For information, go to gov.uk/business-support now.
You know that feeling when you get more than you expected? Like discovering that the box of chocolates has a whole other layer underneath? Or scoring extra poppadoms with your takeaway? Or joining Tesco Mobile and finding out you get the latest phones and 99% UK network coverage? Yeah, that moment feels good, right? Tesco Mobile. Every little helps.
99% 4G population coverage indoors and outdoors across UK.
If you can build that flat-pack wardrobe without looking at the instructions, you've still got it. If you can manage 5 keepy uppies on your first go, you've without question still got it. If you can toss a pancake to the ceiling and not let it hit the floor, surely you've still got it. And if you can just about fit into those jeans you bought 5 years ago, you've definitely still got it. Brute, still got it.
Our citizenry has more cash now than they had going into what will be the shortest recession in the history of the United States. This is not your garden variety recession. It's not because it's not your garden variety response, both on a fiscal and monetary standpoint.
Paul Tudor-Jones to the Economic Club of New York in the last 24 hours. He added to that, if there was a franchise for humble pie, oh my lord, that'd be a mile long to own that, because we all had huge gulps of it, me included. Some legendary investors in the past week, Tom, who just had to hold up their hands and say, we missed it.
No question about it. I'm glad you bring it up, John, and you really have to bring it up as you do gracefully. This is a tough act, folks. I can't tell you the price of being wrong in the market when you don't participate, and that's why people like Paul Tudor Jones, Mr. Druckenmiller, and others, Mr. Marks, listen to the economists. One of them is Thomas Porcelli with RBC Capital Markets. He has been such a great help to us engaging this economy. Tom, I'm going to cut to the chase. What's the nuance? What's the distinction you're going to listen to from Chairman Powell today?
I think in a lot of ways he sort of has preempted himself. Right? I mean, he speaks all the time. I mean, what is he speaking every day now? Sorry, that was a bad economist joke. So I think he talks with such regularity nowadays. Thank you for the late laugh. So I think he speaks with such regularity nowadays. I don't think that it.
We can start a segment again if you want. Tom, do you want to start again? We can just start it again. Take a breather. Just count to 3 and go again.
I think that there's almost nothing that he could say today that's going to surprise us. The Fed is operating in real time. They don't wait for an FOMC meeting to sort of to lay out a new program or to upsize a program like they did the other day with the Main Street facility, right? I mean, classically they would have waited until an FOMC meeting to sort of make that announcement, but instead they made the announcement yesterday or the day before. Okay. And so I think I don't look for anything that's all that revealing.
Okay, but brilliantly said, Tom, about every day is a Fed meeting, and I really think that really captures what we've been living for the last number of months. Then what does that say about the dumb dots? I mean, I have heard you say that dots are not efficacious. What are you going to learn from the dots today if every day is a Fed meeting?
Yeah, I don't think there's going to be much to learn from these dots, to be honest. Again, look, let's be clear. I mean, everyone that does what I do, we're in the business of trying to find something interesting or nuance and et cetera. And I have no doubt that, even me later today when I'm writing my note on the Fed, I'll have to find some nuance. But I think at the end of the day, I think there's very little that we're going to even learn from the dots. I mean, I don't think that there's any question that the Fed does not want to adjust policy anytime soon. Now, again, surprise is relative. So what I would say is, I wouldn't be the least bit surprised if in the 2022 dots that you see some folks that are looking for a lift in funds. That wouldn't surprise me in the least. But I don't know if the market is totally braced for that. Now, again, I think as we all recognize, 2022 is an eternity from now. But I wouldn't be the least bit surprised if the Fed is basically acknowledging, which I think would be more than fair, that as you roll out the next year or two, that they're going to want to take back some accommodation.
Tom, you know why central bankers like forward guidance. Central bank heads love forward guidance because it binds the rest of the committee. It just forces them to shut up as the data improves to even consider raising interest rates. Do you think Chair Powell is that kind of leader that he'll be looking to bind the committee for the next 12 months, 24 months?
Oh, I don't think there's any question about that. In fact, I mean, look, the whole conversation on forward guidance is now sort of starting in earnest, right? And of course, at a minimum, we know that from the FOMC minutes. I mean, look, I think what we have to keep in mind is, there's some good approaches to forward guidance, and I think we also recognize there's some really bad approaches to forward guidance. I would say a really bad approach is based forward guidance. There's no way that anyone can lay claim to, hey, in September of 2021, things are going to be better. I mean, I don't know why you would ever want to bind yourself by some date-based forward guidance. I'm much more sympathetic to data-based forward guidance. Again, even recognizing that there's some flaws with that. I mean, the Fed was talking about and has been talking about this idea of maybe the unemployment rate is a pretty good metric for that. I think you have to tread carefully there, because I think, as we all know, and we know this acutely from the last couple of months, that the unemployment rate can move in quirky ways for reasons that are not always obvious to people. I mean, we know about the potential for some misclassification, but I'm talking about something even more than that. If you're in a dynamic where all of a sudden the backdrop is sort of better, right? People are really feeling good about the backdrop. You can get this massive flow into the labor force, right? Which is a good thing. People are feeling better. But guess what that would do? That would actually push the unemployment rate up, right? I mean, just given the way that the math works on the unemployment rate. So I think that we would define that as a good increase. But again, that's why I say I think you have to be careful with the unemployment rate as a metric. And so instead of choosing some point estimate, which I sincerely hope they wouldn't do, and I don't think think that they would. But I think instead you would have to talk about it in some sort of trend-like fashion. So data-based forward guidance, I'm much more sympathetic to.
Tom, when you go and try to find some nuance in the Fed meeting later today with all the other fellow economists, I wonder what you're going to say about yield curve control, given the fact that you've come out against it. You've actually said, I don't like it. It's redundant. What are you hoping they'll say?
Yeah, so look, I was happy when the minutes came out and they basically said, hey, only a few of us are talking about this. We know who those few people are, right? It's Brainerd and Williams for sure, and I'm guessing some other person, whoever that may be. We know that Williams has pretty decent amount of influence within the Fed. So the fact that there's only a quote unquote few people saying it, the fact that one of them is Williams, I think that lends to us that suggests that there's a real possibility that you could see yield curve control really gain some momentum internally, and we know that he is obviously well respected by Powell. From our perspective, I mean, if I'm going to simplify a sort of a complex idea, yield curve control, if you're going to focus on the front end, which it sounds like the Fed wants to do, I mean, let's be clear, they couldn't target 10-year yields. It would just almost be impossible for them. So they're going to focus on sort of, say, 1 and 2 year maturities. It strikes us as the phrase belts and suspenders. I mean, the Fed already owns the front end of the market thanks to Fed funds. And so that's one of the things that we would define as sort of the redundancy of yield curve control if you're only going to 1 and 2 years out. And look, let's be clear too. I think for people that are worried, oh yeah, but the Fed didn't seem to have a lot of control over the front end of the curve, last year. Yeah, but that was for a very specific reason. It was because they kept on, sort of chopping reserves down more and more. We're now at a record level of reserves. We're 3.2 trillion. So the rationale for why the Fed sort of quote unquote lost a bit of control in the front end of the market is just simply not present at this point. So yeah, we do. We just don't see the point.
Well, it's got back that control now. We're in line with Fed funds all the way out to 3 years, and maybe they'd like to see it all the way out to 5. Tom, we've got to continue this conversation. Always great to get your insight on a day like today. Tom Porcelli there of RBC Capital Markets. Much more still to come on forward guidance. Should it be date contingent or state contingent forward guidance? We'll catch up with the former RBI Governor, Raghuram Rajan, on this program, live on Bloomberg TV and radio, coming up next on Bloomberg Surveillance. Alongside Tom Keene, I'm Jonathan Ferro, together with Lisa Abramowitz with equity futures recovering from earlier this morning. This is Bloomberg.
Business is constantly evolving. Is your financial printer evolving to keep ahead of the curve? At Command Financial, we are redefining financial printing by providing industry-leading expertise, leveraging technology, and honing processes and best practices. Every day, Command helps SEC registrants, as well as members of their working groups, including securities attorneys and investment bankers, prepare, file, and disseminate regulatory and disclosure documents, such as registration statements, M&A documents, and mutual fund prospectuses and reports. Command provides a full range of services to help you effectively complete your deal, meet your disclosure requirements, and achieve your shareholder communications objectives. Visit our website at commandfinancial.com and learn how we're evolving, not only with the times, but also with your business requirements. Command Financial, redefining financial printing.
Imagine being denied an apartment because of your religion, or your race, or because you have children, or a disability.
It's so wrong. Yes, but who has the power to stop this?
You do. Each of us has the power. The law is on your side. It's illegal for landlords to discriminate because of race, color, religion, sex, national origin, disability, or familial status. If you suspect that you have experienced housing discrimination, file a complaint with HUD immediately so we can investigate it. Fair housing is your right.
Use it.
To learn more, visit HUD.gov/fairhousing. That's HUD.gov/fairhousing. Or call 1-800-669-9777. 1-800-669-9777. A public service message from HUD in partnership with the National Fair Housing Alliance.
This is a Bloomberg Money Minute.
This is a message from the government about the emergency measures to support the economy during the period of disruption caused by the coronavirus. To help you, your business, and your workers affected, you can apply for cash grants, business rate holidays, statutory sick pay relief packages, as well as the coronavirus job retention and self-employment income support schemes. For information, go to gov.uk/business-support now.
If you can build that flat-pack wardrobe without looking at the instructions, you've still got it. If you can manage 5 keepy uppies on your first go, you've without question still got it. If you can toss a pancake to the ceiling and not let it hit the floor, surely you've still got it. And if you can just about fit into those jeans you bought 5 years ago, you've definitely still got it. Brute, still got it.
There's a reason flash storage is called flash storage and not electronic non-volatile computer memory storage. From quick and efficient data retrieval to instant scalability, everything about IBM flash storage is fast. It's also cloud-ready and surprisingly affordable, with a recommended monthly price of £310 for 24 terabytes of all flash. Order by the 30th of June and pay nothing for 90 days. Find out more at ibm.biz/flash offer.
From New York City, this is Bloomberg Surveillance for our audience worldwide. We're live on Bloomberg TV and on Bloomberg Radio. Alongside Tom Keene, I'm Jonathan Ferro, together with Lisa Abramowitz, counting you down to an opening bell and a Federal Reserve decision a little bit later this afternoon down in Washington, D.C. Here in New York City, an equity market that recovers. We were negative, now we're positive 9 on the S&P 500, up around about 1/3%. In the bond market, yields just creeping a little bit lower. The curve was flattening. Now the whole curve just drops lower by a basis point or two on a 10-year to 0.8%. And in foreign exchange, the dollar weaker through the session. It stays that way against the euro and sterling too. Cable advancing by around about 1/3%, Tom.
John, it is Fed Day, and of course we'll talk to our esteemed guest here about Fed Day. This weekend I will put out, folks, my book of the summer. One of them I'm going to surprise with on LinkedIn here this weekend. It's a wonderful, wonderful book on international relations. And the other one is The Third Pillar. It was a book last year that was extraordinary on community and is absolutely the book of the moment right now with what this nation is going through. Raghuram Rajan joins us from Booth School, Chicago. He's the author of The Third Pillar and, yes, the former central bank head for his India. We'll get to that here in a wide-ranging discussion. Raghu, we have to talk about Federal Reserve policy today. I understand you have a little bit of reticence about that, but the identifiable fault line of our central bank policy is somewhere out there somehow. The debt has to diminish. How will they do that?
Well, they can't really do anything about it for now. What they have to do, and what they've been doing very effectively, is support all markets. The problem is when you support all markets, you are not letting the markets do their work. And the question is, when do you allow that to happen? So take, for example, the highly indebted companies like Hertz, which are experiencing a revival without any debt restructuring. As we go on, the question is, when do we allow them to restructure their debt so they can emerge healthier from this crisis? And that's the question the Fed will have to grapple with all the market supports. When does it allow the market to start operating on its own?
Raghu, does the Fed risk its independence? We had a conversation earlier today about how the Fed came out of the 1940s and World War II and basically had to nationalize the debt economy to allow the nation to recover. Is the great unseen out there is we have a Fed that loses its independence at some point?
Well, I hope not. But the forces that pushed for Fed independence are no longer operating, right? Remember, the big issue in the 80s was very high inflation, which is what Paul Volcker tackled by raising interest rates sky high. The reason for Fed independence then was that inflation was the problem, and making the Fed independent of the government would allow it to operate and bring it down. Today, we no longer have an inflation problem. If anything, it's a disinflation problem in the short term. And therefore, when the need for the Fed is really to support the the economy, for the Fed to cooperate with the Treasury, as it's doing very well, the rationales for Fed independence become a little less clear. My sense is it will reestablish itself again over the medium term, but in the short run, that rationale is no longer on the table.
Well, this is the issue, isn't it, Professor? The perception of independence and central bank independence. If these two, both the Treasury or the fiscal policy side of things, is going to work closer with monetary policy in the year and years to come, as they actively support issuance from governments, how do they maintain the perception of independence in an environment where both sides are working together to make sure that we can have the kind of Treasury issuance that we've had over the last few months?
Well, this is a really big question. It has to work through institutional independence. So, for example, protecting the position of the Fed chairman, for government to stay away from criticizing the Fed for whatever it does and pushing for more overt activity. It has to be a discussion which is on equal terms between the Treasury and the Fed. It cannot be one side pushing the other. That will alter perceptions of Fed independence. I think the Fed is doing a fantastic job in cooperating. It's done everything it possibly could, but there has to be a reciprocal arrangement from the government side to respect the independence and not make overt statements about what it should do.
Professor, I don't want to cause any dramatic headlines for you, but if we can lean on your experience of the RBI and just reflect on what's happening in developed central banks right now, to some degree, do you think they are taking on emerging market characteristics, how these central banks are operating together with fiscal authorities?
For sure. I mean, this was always an emerging market problem. The central bank was under the thumb of the fiscal authorities and essentially had to monetize the debt. In many industrial countries, we are in a similar situation with enormous amounts of debt having to be put out into the markets, and the central banks taking it on their balance sheet. If you look at the Fed's balance sheet, it's expanded from 4 trillion to 7 trillion in the space of a few weeks. This looks a lot like monetization and is very helpful in enabling the government to issue. But it has to be seen as temporary and not a permanent facet of the landscape. That's what they have to work very hard on doing, on ensuring there is separation. The Fed is willingly doing it in order to meet its mandate, not something that's being forced on it by the Treasury.
Professor, a lot of people don't really see a path for the Federal Reserve to shrink its balance sheet at this point, and it doesn't seem like there's any fiscal hawks left in Washington, D.C. as they try to support this government. What's the potential consequence? I mean, building on what you were talking about with developing markets, their currency is the escape hatch there, right? It deflates, it depreciates versus other currencies when this fiscal balance gets super out of whack. We're not seeing that, though, right now with the weakening of the dollar being attributed to risk on rather than a lack of credibility. At what point is the currency back in play here?
Well, typically the central bank's intermediation starts becoming more difficult when, for example, the banks separately are unwilling to hold the enormous quantity of reserves that are bound to maintain a large balance sheet. Second reason, of course, is inflation. Now, neither of these is currently a big issue. When they start becoming big issues, it is very important that the Fed be able to shrink its balance sheet by selling assets back on the market. And presumably under these two conditions, it will be reasonably easy to sell assets back onto the market. The greater danger amongst these two, stronger credit and stronger inflation, is probably stronger inflation. And that's why that's a risk over the medium term. It's not a risk today.
Professor, I was reading a recent column that you wrote where you're arguing for federal governments as well as monetary policymakers to withdraw some support now. Is that an accurate reflection of your stance?
No, I'm not saying withdraw support now. What I am saying is as we go forward, we have to change the narrative from this is about a couple of months of support to the economy as we deal with the pandemic and then things come back. Now, that was the narrative which we started the fight with in March. But now it's becoming much clearer. This is going to be a long, drawn-out battle. And some sectors of the economy are going to take years to come back. Some sectors will have to transform themselves. So what I'm saying is, as we go forward, we have to ask, how much support do we need and where? Do we still have to continue supporting Hertz and Carnival? Or should we allow them to restructure their debt and maybe change their business models so that they can deal with the emerging new economy? That's really the question. When do we start moving support to enabling transformation rather than preserving the economy as is? And as we go forward, we have to move from preservation to transformation, both in terms of treasury policies as well as in Fed policies.
Professor Rajan, one final question, and I must turn back to the third pillar and your primal scream for community in America. This past weekend, Chicago with the gang warfare was a war zone. We've had protests from sea to shining sea in America. Your book is a book of optimism, but you talk about the intractable inability for America to find community. How do we find the third pillar?
A great question. If you look at what the pandemic has done, it has exacerbated every division we had, whether it's rural-urban, whether it's on the basis of race, whether it's on the basis of education. We're sitting, working at home. Others are on the front line dealing with the pandemic or serving people in stores. So really, the issue is, how do we bring the country together in a stronger way? And I really believe we have to look at disadvantaged communities. We'll have to look at communities that have fallen behind, and we have to ensure that they provide their people a stronger sense of belonging, a stronger sense of empowerment, but also greater capabilities for the new economy we are creating. That requires work bottom up. And that also requires pushing more power to them so that they can seize that power and use it effectively. This is a lot of work. It requires transformation of our economy. It requires a lot more decentralization. But I think in the long run, this will be the way we get sustainable growth, not through more and more debt, but through stronger growth from every part of the economy. So that's what the book is about.
Professor, a really powerful conversation, and we appreciate your time and look forward to getting you back soon. That is Professor Raghuram Rajan, the former RBI governor and the University of Chicago Booth School professor, on enabling transformation, the absence of capitalism, and whether central bank decisions of the last few months have delayed that, maybe inadvertently, but they're the downsides, the negative consequences we have to discuss in a month and maybe even years to come. In this bond market, treasuries with a bid, inflation out about 10 minutes ago, Lisa. What's the read?
Yeah, it actually came in lower than expected. In other words, we saw CPI consumer prices actually contract by 0.1% versus the expectation for it being flat. Interesting to see the dynamics here, John. While a lot of prices declining across the board, food increased significantly. We really have to dig a little further into some of these reports.
And much more still to come, live on Bloomberg TV and radio. This is Bloomberg Surveillance alongside Tom Keene. I'm Jonathan Ferro, together with Lisa Abramowitz with Equity Futures positive 8. This is Bloomberg.
Now let's see what else is going on around the world. Here with the latest headlines is Amy Morris. Good morning, Amy.
Thank you, Tom. Good morning. The top infectious disease specialist in the U.S. is calling the coronavirus pandemic his worst nightmare. Dr. Anthony Fauci warning that the outbreak is far from over, warning that there is still a risk it will return and it won't just burn itself out, saying there needs to be a vaccine for the world. This as coronavirus cases continue to slow in the U.S. Data show infections rising at the lowest rate since March. Republicans in Congress are quickly trying to craft a bill to change police practices and accountability nationwide. Democrats have already unveiled a sweeping overhaul, and House leaders are calling lawmakers back to D.C. so they can vote on it. Senate Majority Leader Mitch McConnell says they're working on their own response.
I've asked Senator Tim Scott to lead a group that is working on a proposal to allow us to respond to the obvious racial discrimination that we've seen on full display on our television screens over the last 2 weeks, and what is the appropriate response by the federal government.
McConnell's Louisville hometown faces unrest also after the police shooting of Breonna Taylor in her home. A day after George Floyd's funeral, his brother Philonise Floyd will make an appearance on Capitol Hill as one of a dozen witnesses scheduled to testify at today's judiciary hearing on policing practices and law enforcement accountability. Live from the Bloomberg Interactive Brokers studios, this is Global News 24 hours a day on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Amy Morris. This is Bloomberg.
This is your Bloomberg Real Estate Report. I'm Denise Pellegrini. So what's it like to be a landlord during a pandemic? Bloomberg Business Week guest Liz Dunn about it. Dunn owns 10 small buildings in Seattle with shops on the ground floor and office space and apartments above along Capitol Hill in Pike Pine. And she says she initially told tenants who she knew were in trouble they should defer their rent till later, but it's been tough. Here she is standing outside one of the properties with a restaurant and shops.
If you'd asked me 3 months ago, I didn't expect that my main job would be helping all my tenants try to figure out how to get a PPP loan. That has been a huge chaotic disaster. I think out of the 25 or so who have tried to apply, there's 5 who've actually received it. So that's super frustrating.
Seattle now is starting to reopen, and Dunn says as the city moves through that process, she thinks customers will come back. And that's your Bloomberg Real Estate Report. I'm Denise Pellegrini.
Why do hedge funds and other alternative managers rely on Pershing for a highly personalized experience? Mark Alderati, a managing director at BNY Mellon's Pershing and head of Prime Services, explains.
In today's fast-paced environment, where the only constants are change and volatility, you need a prime broker who's both steady and agile, focused on supporting your needs so that you can focus on growing your business and producing results. Exceptional client service and advocating for our clients is at the core of what we do. Our award-winning high-touch team is just one of the benefits of working with BNY Mellon. We help alternative investment managers create great experiences for their clients. Whether it's customized financing, securities lending solutions, platform access, or outsourced trading, BNY Mellon's Pershing is a prime broker who's committed to this business and dedicated to meeting your evolving demands.
To learn more about the unique and industry-leading solutions for hedge funds and other alternative managers, visit Pershing.com. Pershing LLC. Member FINRA, NYSE, SIPC.
Connecting. So I often struggled at school. Once, when we had a maths test, I looked around the room and everyone was just doing it. And I couldn't, and I began to cry. But my teacher came over and said, it might look like one big problem, but it's just a handful of small ones, and you can deal with that. I hear her voice in my head for every problem I face to this day.
Teaching. Every lesson shapes a life. You could get £26,000 tax-free to train as a teacher. Subject to eligibility, selected subjects only. Search Get Into Teaching.
At Asda, we're helping you shop safely by keeping our stores clean and limiting customer numbers so you can keep 2 meters apart. With our Scan and Go mobile app, you can reduce contact at the till too. Asda, we're all in this together. Subject to availability. Mobile data charges may apply.
With the NHL season temporarily on ice, now is a good time to catch up on past games.
Bergeron, he scores!
With game replay on TuneIn, you can listen to every power play, slap shot, and goal of the 2019-2020 season so far.
Suter to Cunnin to Fiala, he scores!
And for a limited time, it's free for hockey fans everywhere. Search Classic Game Replays to start listening.
The central banks, they did what they had to do, which is they're not trying to make life nice for the government. They are basically trying to push the economy up. And the result of this is that they have very low rates, which is the right thing to do.
Olivier Blanchard of the Peterson Institute on the Federal Reserve supporting some of the decisions being made over the last several weeks. From New York City this morning, good morning to you all. Alongside Tom Keene, I'm Jonathan Ferro. Together with Lisa Brambitt, this is Bloomberg Surveillance live on Bloomberg TV and on Bloomberg Radio. A little bit later, Tom, in the next hour on Bloomberg TV, as I step away, we'll catch up with a critic of the Federal Reserve, Jim Bianco of Bianco Research, who brings up Goodhart's law. When a measure becomes a target, it ceases to be a good measure, and this whole market has become a target in the last couple of months.
It'll be really interesting to see. There's any number of ways to cut here, and Mr. Bianco has written, just folks, brilliant and indeed controversial research on where we are right now. That will be most interesting. It has been an extraordinary day for Bloomberg surveillance and wonderful conversation, including Professor Rajan moments ago. You heard from Olivier Blanchard, who we spoke to yesterday. It is now time to turn to the equivalent in New York City real estate. Some people do real estate and they go on with their lives, and others actually become part of the fabric of the community. William Rudin has done that. He has been hugely upfront on the development of real estate in New York City that has a social good and a social fabric. We are thrilled to bring him to you as New York City reopens. Bill, thank you so much for being with us today. What has the last few weeks been like for you, your properties, and the people within those properties?
Well, first of all, Tom, thank you and the rest of the team for having me on. And I think, your Professor Rajan just talked about community, and you mentioned it. And what we find and what we work on is creating communities and trying to bring people together. And we obviously have gone through, over the last several months, a very difficult period of time. And in the last couple of weeks, there have been, I think, dramatic sea changes in the way, hopefully, people look forward and try to bring our communities together, because that's really critical. And I think our city is, so diverse, and that's our strength. And how do we bring people together? And you can't do that working from home. And I think, some of your other speakers have talked about that too. You have to be working in your office, working together. I talk about collaboration, community, connectivity. So that's what we have to keep doing to move forward our economy. And phase one opened up the other day in New York. You had almost 800,000 people on using the subway. The governor and the mayor have done an incredible job. We were at a peak. Several thousand people a day getting sick today. It's near. Yes, Tom.
As I mentioned, I don't mean to interrupt, Bill, but just because of time, and I know Lisa's got a whole bunch of questions here as well. What I find so important, Bill, is hope. We have to develop a hope of the people. Maybe they're not protesting, maybe they're certainly not looting, but they have lost hope over the last X number of years, not about the pandemic. They've just lost hope in development. How do we jumpstart that hope within the greater New York City region?
Well, I think first step is opening phase one, and then in a couple of weeks from now, opening phase two, getting our city back, getting the economy moving again, creating, the construction cranes are working. The men and women on those sites are back into work, almost 400,000 or 500,000 people. That is a sign of hope. And you're right. We need to have signs that give us guidance that things are going to get better. You're seeing legislation, in New York State yesterday, in terms of changes in policing. We have to work together with communities and create better policing policies where people feel confident about their police, and we have to create economic opportunities for all spectrums of our population, and we're going to do that. And you're going to see New York City be at the forefront of job creation, dealing with issues from racial injustice to affordable housing to education. That's what we do, and we've come back before from major tragic events, and we've worked together. This is an entrepreneurial spirit. You talk about hope. We've come back before from in the early 90s where we had 90 million feet in Lower Manhattan. You had 30% vacancy. We came together. We converted office buildings to residential. Yeah. We created tax incentives for companies to move downtown. Now you have 70,000 people living in Lower Manhattan from 10,000 25 years ago. So there are symbols out there. 9/11, we came back. After Sandy, we came back.
Well, Bill, let's talk about the hope versus the here and now. As you own 17 office buildings, I believe, throughout the city, what's the demand like right now for that office space?
Well, obviously, when the city and the country went on pause, things slowed down. But there, going back to the hope, a lease was signed 2 weeks ago by TikTok in Times Square for over 230,000 feet. Over 1,000 people are going to move into an office building on 42nd Street. That's hope. That's a sign that things are going to turn around. We're working on different deals. I know a lot of my colleagues are working on things. Unfortunately, things got put on pause. But as soon as we start opening up the economy, I think you'll start seeing activity, leasing, both commercial and residential, and people starting to come back into the city.
Bill, got to leave it there. Bill Rudin, thank you so much for the update on the spirit of New York City, and of course with the many, many properties that he has, that he's built, particularly his historic effort in Battery Park after 9/11. William Rudin on the spirit of New York. The spirit, Lisa, today has to be the Fed meeting. There's no question about that. I guess we're going to get to, there'll be a statement. Then we'll move on, and there'll be questions. The question, Lisa, that I'm going to listen for more than anything is a view out to 2022.
Yeah, and what kind of guidance they give in terms of the data that they're looking for to adjust monetary policy. Right now, the read-through in stocks is up and up further, and though we are seeing the defensives lead, and Tom, by defensive, I mean the AirPods that are sitting under your couch. That is the defensive, is Apple.
That would be Apple, and we need an entire brace of AirPods here at the Keene household, led by Vet Bill, who's just desperately looking for those. What a switch from right on the screen early this morning. Futures up 12, Dow futures up 43. They lag on a percentage basis. The S&P 500, and you've got almost a 1% move on the NASDAQ futures, up 91 points. That's an extraordinary statistic. The VIX confirms that and comes in based off the S&P 500, 27.18. And the yield space here, lower yields fractionally this morning. At 2 p.m. today, Scarlett Fu leads our Fed coverage. Alan Blinder among one of our guests. That will be more than interesting. Gary Stern as well. This is Bloomberg.
Have you wanted to speak?
Can my employer change my contract?
Am I entitled to statutory sick pay?
What is holiday pay?
When can I take annual leave?
Is my employer allowed to change the hours I work?
How do I raise an issue with my employer?
Right now, it's important to know your rights in the workplace. At ACAS, we're here to help with free impartial advice. Visit us today at acas.org.uk/rights at work.
Dear Dad, happy Father's Day. You are my rock, my go-to guy. Whenever I call, you're happy just to listen. You've always been there for me, by my side. I don't know how you put up with my piano playing all those years. Hang on, kiddo. I'll listen in a sec. I miss you. See you soon. Love you lots, Luce. This Father's Day, send love straight to Dad's door with moonpig.com. Download the app today.
Okay, here we go.
With the NFL draft in the books and the schedule set, check out a TuneIn podcast for daily updates on the lead up to the 2020 season. Like the Ringer NFL Show, where a rotating cast of Ringer experts talk with players, coaches, and special guests about the NFL landscape.
A lot of the other teams that we consider...
Or ESPN's NFL Live.
If there are some delays because of the COVID-19...
Search sports on TuneIn to explore these pods and much more.
With the NHL season temporarily on ice, now is a good time to catch up on past games.
Bergeron, he scores!
With game replay on TuneIn, you can listen to every power play, slap shot, and goal of the 2019-2020 season so far.
Suter to Connor to Fiala, he scores!
And for a limited time, it's free for hockey fans everywhere. Search classic game replays to start listening.
Are you ready for the realest first-hand take of what's happening in the NBA? On their podcast, All the Smoke,
Former NBA players Matt Barnes and Steven Jackson bring their fiery intensity to the mic, dishing on the latest news and drama from on and off the court without boundaries.
Half man, half amazing. My friend, our brother, Vince Carter, man. Welcome to the show.
Yo, what's up, man?
What's up, my brother?
Man,
Search All the Smoke on TuneIn to listen.
In case you didn't know, TuneIn lets you listen to the same radio stations you pick up on your home or car radio, except you can hear them from anywhere. If you want to find a station from somewhere else in the world, navigate to the By Location section under Browse. Keep exploring with TuneIn.
With millions of podcasts dropping new episodes all the time, how do you keep up with all your favorites? TuneIn makes it easy. Simply head to the home screen and find your new episode section to see the latest additions.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
Buckle up, race fans.
NASCAR is back in the driver's seat.
And you can cut straight to the action here.
With the Performance Racing Network on TuneIn, you can hear PRN's live coverage of some of this year's top events.
As NASCAR's top drivers, Kevin Harvick,
Clint Boyer, and more get back on the track.
Search Performance Racing Network to listen and see upcoming races.
The first time.
We always talk about the losers in a trade war.
You benefit if you're just further away from China.
So that you can too.
What are the ramifications if she crumbles or doesn't crumble?
Bloomberg Radio, the Bloomberg Business, Radio.com, and iHeartRadio apps, and BloombergRadio.com. Bloomberg, the world is listening. From the financial capital of the world, 24 hours a day at Bloomberg.com, on the Bloomberg Business app, and on Quick Take by Bloomberg. This is Bloomberg Radio. This is Bloomberg Surveillance Economics.
There's no other way to say the world economy is in awful shape.
Whether it's a few months or 18 months, eventually it will come to an end. The economy will revive.
Finance.
Many people take the Fed to task. I think the Fed should be applauded.
We only have limited tools. It's up to the fiscal authorities to do something about it.
Investment.
In a couple of years from now, things are going to be back to probably where they were at the very beginning.
Bloomberg Surveillance with Tom Keene and Paul Sweeney on Bloomberg Radio.
Good Wednesday morning from New York City and points beyond to our worldwide audience. It is a Federal Reserve Wednesday, and investors are expecting the Fed to continue to support liquidity in the markets, which have been so important here as the markets deal with the economic fallout from the COVID-19 issues. Right now, futures are looking positive. Let's get a sense of where the real action is on the equity futures markets here with Karen Moscow. Karen, what do you have for us?
Thank you. Well, we're watching Starbucks this morning. Those shares down 2.7% in early trading. Starbucks, a third quarter consolidated revenue decline attributable to COVID-19 to be about $3.2 billion. That's sending that stock lower this morning. Guess said based on trends, it currently expects revenues for the second quarter of fiscal 2021 to have a decrease similar to that of its first quarter. Its shares are down 12% this morning. Hertz is down more than 10.5%. It received a letter from the staff of NYSE regulation saying that it had determined to commence proceedings to delist the common stock. Red Robin shares also lower, down 6.4% after reporting comparable first quarter sales that fell 21%. United Airlines and JetBlue downgraded by JP Morgan analyst Jamie Baker, who said valuations are beginning to stretch and the current pace of stock gains cannot be maintained for much longer. United shares down more than 4.5%, JetBlue down 5.7%. Delta is also lower, down 4.5%. It expects second quarter revenue to be cut by 90% compared to a year ago. And those stocks are all lower, but one stock that's higher, Ford, for example, up 1.1%. It said an electric F-150 pickup will be available within 24 months and says by July 6th, all U.S. plants will be at pre-COVID levels. Paul.
Karen Moscow, thank you so much. We appreciate that. Ford getting back into the game, getting those factories ramped up, get those Ford F-150s back out, coming off the line. That's good news, certainly. One of the things we're so, we're so beneficial to have here at Bloomberg Surveillance is the really, really smart people at Johns Hopkins University. We've had the doctors and the nurses and the infectious disease folks really giving us some color as to really how this whole issue is playing out. Right now we have Lauren Sauer from Johns Hopkins University, assistant there, giving us her sense of kind of the latest on the coronavirus. Let's go to Lauren right now. Listen in.
I think we have a lot to learn on how actual asymptomatic transmission occurs. There are several studies looking at asymptomatic transmission rate, and I think one of the challenges is understanding when we're talking about asymptomatic versus pre-symptomatic. And much of what we know right now about the virus and how it spreads, how it transmits, is really based on the transmission around people who have symptoms, whether they're mild or severe.
What do we know about genetics? We were also hearing earlier that if you have a blood type O, there's a lesser chance of you developing the virus into something that is worrying.
Yeah, so the 23andMe study that found that blood type O people were less susceptible to severity of illness, that was a study of about 10,000 participants, and what it really showed us, we have a lot more to learn again about how host genetics, host genomics impact how people are susceptible to COVID-19. So there was a study that looked at host genetics or human genetics and its impact on people with COVID-19 in China and one in Italy and Spain, and they found the Italy and Spain one found that type A was created a likelihood of increase of severity, and the Chinese study also looked at susceptibility to COVID-19. And this 23andMe one, I believe, is the biggest study that has been done, and I think it's the only one that's looked purely at an observational study about blood type. And I think, this is how we're going to start to learn so much more about this disease, because it's reaching people who have never been hospitalized, have never sought care, and those are the ways we're going to learn more broadly about COVID-19 across the population.
I mean, we talk about, the study made in China, the one in Italy. We talk about 23andMe. Is there an overall study that actually gathers all individual studies so that we actually put all the data together, or is that just clinically impossible?
Yeah, so those types of studies generally are called meta-analyses, and what they do is they find the papers that have rigorous and similar methods, and so you have to go through each paper individually, understand their methods, understand their results, understand the underlying data and the assumptions that they made in their calculations, and then you combine those papers together. And so as more of these papers come out, people will be able to do meta-analyses of these papers to have a broader understanding, a more population-wide understanding. There's challenges associated with meta-analyses, and there's only so many things you can actually analyze, but they can be really, really powerful.
Where are we seeing spikes at the moment, and how do you track a possible second wave? Is it by, is it just the number of infected and by contact tracing, or by the people that end up in hospital, or is there a better way to try and see it before it actually arrives?
So testing continues to be the best way. Contact tracing can be really helpful once you have an understanding of where the transmission links are occurring in communities. You need testing as the backbone of contact tracing, because you have to understand, especially in that place where we were talking about earlier with those pre-symptomatic cases, you want to catch people as soon as they develop disease, and then you want to understand who their contacts are and use quarantine or isolation to limit them as much as possible.
That was Lauren Sauer of the Johns Hopkins University. Tom, we're so fortunate to have the Johns Hopkins folks with us every day, giving us some real, informed insight on kind of what's going on with this coronavirus and kind of the implications for the healthcare industry and kind of how, folks out there should be thinking about this virus coming up.
Yeah, it'll be interesting to see. There's so much to talk about there. Bloomberg Surveillance this morning, brought to you by Cohn-Resnick Advisory Assurance Tax, for ideas to stabilize your business and find opportunity amid uncertainty. Visit the Cohn-Resnick Coronavirus Resource Center at cohnresnick.com/COVID-19. Early this morning in Paris, the OECD issued what I am more than certain was the grimmest report they've ever done, and with it was some terrific nuance. That was led by Laurence Boone. She is their chief economist and has just done a phenomenal job of explaining the distinctions of this pandemic. Lawrence, what is the single distinction when you overlay this pandemic on the global economy? What's the one message you have?
Well, the one message we have is that we are confronted by massive uncertainty. It's a global pandemic, as you say, but also a global economic crisis, and it's the biggest and toughest crisis we are seeing. And because we have this massive uncertainty, we had to issue two scenarios, two sets of forecasts for the first time in OECD history, so that we could frame, the extent of what's the possible outlook, and both of them, as you said, are very grim.
Lawrence, what is so important here is the shift, literally in the last number of days, but certainly in the last 2 weeks, towards a less prosperous world economy. We had a developed nation COVID virus, and now we have the COVID virus of an impoverished Mumbai and all of India, the horrific statistics out of Chile and the rest of South America. What do you people presume will be the developing economy effect of this terrible virus?
So this is one of our major concerns. As you know, developing economies usually have less equipped healthcare system. It's much more difficult to confine people and provide a shelter because of the sheer size of informal workers. They've been hurt by low commodity prices as well. And what we've seen is that capital outflows have been more abrupt and massive than in any other crisis. And I think that's where the OECD message becomes really, really right on point, because without cooperating globally, it's going to be very difficult both for this country, but for the rest of the world as well, including the advanced economies, to renew with the type of growth that we had before. Because what this is telling us, beyond the financial risk that can be coming from emerging market economies, beyond the human tragedy, is that the virus, for which we have no vaccine or no treatment, as your previous speaker said, will stay with us if we don't eradicate it everywhere, every single country. And that's why cooperation is so necessary.
So, Doctor, give us a sense of kind of how you think the response has been across, some of the developed economies here. It seems like a lot of economies are trying to reopen here. What is your sense of how this might play out? What are your forecasting right now?
So it's very diverse across developing economies. You are seeing countries like India, where there's still some states are in strict confinement, others are more open. The government's trying to reach out to informal people, informal workers through digital means and also by giving food tickets. We also have countries like Brazil, where the type of decision related to confinement are being made at the state level. Or others like Colombia, who are actually putting in place more confinement and reaching out to informal workers through digital. South Africa has been very at the forefront of this because they had some of the other COVID virus crises before. So it's extremely diverse, depending on the experience they had, how easy they think about using, how comfortable they feel with digital, and also how large is the country and dispersed the economic activity.
Laurence, do you have an opinion and a view, and you're just so experienced at this, of the effort of Merkel-Macron to provide fiscal union in Europe? Have you folded that into the OECD analysis?
So I think that's super important, because one of the main concerns that we had in the building up of these projections is the way that the pandemic, has affected countries within the Eurozone in a very different way. And that depends not only on the confinement and the way they tackle the pandemic, but it also depends on the economic specialization and the type of fiscal support that countries were able to put in place. So we were seeing this divergence across Eurozone countries, which, as you know, having followed that for a long time, is not very helpful. But this European recovery plan put out by Merkel and Macron is right addressing this divergence, and I think this is to be very welcome.
All right. Laurence Boone, thank you so much, and congratulations on just a superb and needed view forward by the OECD. The combination, folks, of Angel Gurria with us earlier and Laurence Boone at this moment has just been a wonderful 2 interviews today. Paul, just extraordinary. I was thunderstruck by the bar chart showing the difference in better U.S. recovery versus really a lethargic Europe as estimated by the OECD. Just thunderstruck.
It really is, Tom. It just kind of calls into contrast here. So, I mean, we're seeing so much, diverse performance across the globe here, and that's really just shocking. So it's, folks really need to bear down here.
Well, it is interesting. It is Fed Day. Stay with Bloomberg Radio all afternoon for analysis of that important press conference. This is Bloomberg.
President of the Jewish Communal Fund, Zoya Raines, and her husband, Robert Friedman, Jewish activists and philanthropists, talk about why they chose the Jewish Communal Fund for their charitable giving.
As very busy working parents, we wanted to focus more on the charity part of it and wanted to focus more on our children and less on the administration.
The Jewish Communal Fund is one of the oldest and largest donor-advised funds, but at the same time, they're totally up-to-date and have state-of-the-art systems for us to access and manage our contributions online. The assets in our fund at the JCF grow tax-free, so we can generate more charitable dollars to support the charities that we care about most.
Let JCF minimize your taxes and maximize your charitable giving.
We're incredibly passionate about our charity, and the JCF allows us to focus more on the charity and less on the administration and the headaches.
For more information about Jewish Communal Fund, visit our website at jcfny.org and request a new fund kit.
Not completing high school is more of a social thing than it was an academic thing. I came out in the 11th grade. Nobody was embracing you. The kids were cruel. It was very difficult to be gay. Even though all these years have passed, I still had that longing to have my diploma. The hard part was determining that I was going to do it, but I definitely didn't do it alone.
At age 30, with the help of her mentor, Carissa finished her high school diploma.
I have a mentor, Maria. She convinced me to continue my education and to finish what I started to get my diploma. Just never judges. She's a true role model. If you're even considering getting your high school diploma, go get it. You can do it.
No one gets a diploma alone. If you're thinking of finishing your high school diploma, you have help. Find free adult education classes near you at finishyourdiploma.org. That's finishyourdiploma.org. Brought to you by the Dollar General Literacy Foundation and the Ad Council.
Influential
For the friendships, for the fresh air, for the space to grow, for the knowledge, for the sport, for the outdoor education, for the wide horizons, for the academic excellence, for the future. Unleash your child's education at West Buckland School, a co-educational day and boarding school in beautiful North Devon. If you're moving to the southwest for a better quality of life, this is education without compromise, in what the Good Schools Guide called a gem of a school in an exceptional location. To see for yourself, find us at westbuckland.com.
People's Postcode Lottery's 30k a day is back. £30,000 will be won every single day by players in the July draws. That's £30,000 for every player in the winning postcode. Visit postcodelottery.co.uk/radio before midnight on the 18th of June to play in the July draws. EPL managed lotteries on behalf of good causes. 16 plus conditions apply. Play responsibly.
News 24 hours a day at Bloomberg.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
And I'm Karen Moscow. U.S. stock index futures are on the rise as investors bet the Federal Reserve will maintain policy support for America's economic recovery from its coronavirus-induced recession. We check the markets every 15 minutes throughout the trading day on Bloomberg. S&P futures, they're up about 8 points. Dow futures up 11. NASDAQ futures up 83. The DAX in Germany is up almost 0.2%. 10-year Treasury up 8/32, yield 0.79%. The yield on the 2-year 0.18%. NYMEX crude oil is down 1.5% or 56 cents at $38.37 a barrel. COMEX gold is up 0.5% or $8.80 at $17.30.80 an ounce. The euro 1.1380 against the dollar. British pound 1.2781 and the yen at 107.32. And U.S. consumer prices declined in May for a third straight month as the coronavirus-induced recession continued to depress demand. The consumer price index falling at 10% from the prior month. And that's a Bloomberg Business Flash. Tom and Paul.
Karen, thanks so much. Really appreciate that data check. And of all that, folks, I would note sterling beckoning on 128 is interesting. George Saravelis at Deutsche Bank was really cautious on pound sterling out 6 months or 12 months earlier this morning. Right now on this Fed Day with our news in Washington, here's Amy Morris.
Thank you, Tom. Senate Republicans are weighing proposals to improve police practices in response to the protests that were sparked by the death of George Floyd. A task force that will write the GOP proposal will be led by Republican Senator Tim Scott of South Carolina, the only black member of the Senate's majority party, as some Republicans start to question the need for more pandemic stimulus. Pangea Policy founder Terry Haynes tells Bloomberg there's still a sense of urgency in Washington for a Phase 4 package.
Washington has committed back in March, and they've stayed on course in a whatever-it-takes kind of mode, and I think that continues for the foreseeable future. The question now is exactly what is it that is whatever it takes? That's a little more nuanced question because we're not quite in the emergency mode we were in March or April, but it's still real, and I think markets can still rely on Washington to do what's necessary.
21 states and Puerto Rico are seeing a rise in COVID-19 cases, and 14 states, including Arizona, have seen their highest 7-day average grow since the pandemic began. Hospitalizations are also up in Arizona. Dr. Sam Durrani is chief of COVID task force at Honor Health Medical Staff in Phoenix, and he's worried.
If we continue at a rate like this, we're facing a significant chance that we're going to have to shut down the state again.
Republicans are trying to convince President Trump that removing troops from Germany is a bad idea. They've sent a letter to the president explaining the U.S. presence in Germany has helped safeguard America and prevented global conflict. The issue may come up when the full committee marks up its version of the defense authorization bill next month. Global news 24 hours a day on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Amy Morris. This is Bloomberg. Tom and Paul.
Amy, thanks so much. Paul Sweeney and Tom Keene, of course, Fed Day with lots of good economic talk coming up, how it folds into these markets. And right now, the markets were red, they're sort of green. And then there's the NASDAQ 100.
That's right, Tom.
Right now, it's up only 0.8% with a life of its own. Paul, I want to go back to first principles with a question that, it's not that I get it every weekend, but I get it every other weekend. What are the rules that Amazon plays under in terms of fundamental security analysis? We all have an understanding of the prices compared to earnings, prices compared to cash flow. I think our audience knows a dividend dynamic.
Yep.
Amazon doesn't have a dividend. They have a stratospheric price to earnings ratio. It's almost like they have a different rule book. When did that start?
It's a great question, Tom. I think it kind of started almost, maybe 10 years ago, when Jeff Bezos kind of went out there with the story of, hey, e-commerce is maybe, 4 or 5, 6% of total retail sales, and that's, of course, a gajillion-dollar number retail sales in the U.S. It's a small percentage, but, boy, it's growing fast, and we are absolutely at the forefront of capturing that e-commerce sales growth. We are the play. We are the way to capture that. So we're going to do whatever we need to do to get the biggest share we can of that e-commerce sales growth. And you know what? We're not going to give you any profits because we're going to reinvest in our business because we think that 5, 6, 7% of retail sales to e-commerce is going to be 10, 20, 30%, and we're going to be the leader there. So let us go for that market share, and when we get there, we'll deliver the profits for you.
Oh, yeah, well, wait a minute. Because there's 12 people, maybe it's 11, I can't remember, who actually listen every day to the show. Those people know that I make this argument all the time. The Roberts family of Philadelphia started this odd thing called cable TV, and there were others as well, but the great belief was Comcast would invest, make no money, and one day they would turn the ship and develop the company for cash flow. Does Amazon have the ability to turn the ship like the Roberts family did and all of a sudden develop Amazon for profit and cash flow?
I think they do, Tom, and we've seen it a little bit over the last several years. They've actually started to actually give you some earnings per share and things like that.
That's from the cloud, right?
Yeah, it's from the cloud, but it's also just a sense that, whenever they want to dial back some of their investments in, giving you another distribution center, fulfillment center, or another plane to deliver your packages in 15 seconds. Whenever they want to dial that back, the profits just surge because we see this huge revenue growth. And that's kind of the story there. They've really, as you mentioned, Tom, about the cloud, they've really been helped by the cloud because that's just inherently the cloud business. Amazon Web Services, and they're number one in the cloud business, is inherently a profitable business.
Full disclosure, I still don't get it. When they deliver a box, do they make any money on that delivery? Do we know if they do?
They do. But the expectation
use a better tape.
Yeah, they do. But the expectation is they can even make even more when they start to dial back some of their investments in their business. But it's at the core, their e-commerce is a good business. The cloud business is a phenomenal business. They're actually getting into advertising. They're a big digital advertising play, Tom. And I know you love to play the digital advertising. So they're actually a big play after Google, after Facebook. Amazon is kind of the third big platform. If you're a big digital advertiser, you can go to Amazon and get a lot of eyeballs.
And of course, everybody, folks, wants to be like Amazon. Literally, Paul, you go to Roach. Paul's still going to Rubber Chicken lunches. Nobody's in the room with him because of the virus, but he's still going. And Paul, all these young Turks stand up and go, "We want to be the next Amazon," because they're looking for that multiple valuation that they get.
Sure. That's actually what Uber said. Hey, we're kind of the Amazon of kind of this kind of gig economy, sharing the rides and the Uber Eats and all that kind of stuff. That didn't necessarily play out too well with investors.
Can I do an Uber Eats shout out?
Absolutely.
Last night, Lola's up in Harlem. It was just killer food.
Oh, nice.
They'll deliver anywhere. You pay for the Uber and you've got the acclaimed Lola's shrimp corn on the cob. We're having it again tonight, I'm told. The intern just told me that. This is Bloomberg. It's Fed Day.
Asset managers who seize change to launch new strategies, add distribution channels, or exploit new technology to re-engineer the investor experience are often rewarded. However, in an industry paralyzed with complexity, few act with agility or decisively. Few run their business strategically. Yet, the most competitive managers in the market know, with the right partner and a flexible operating platform, you can. Go boldly toward change with SEI Investment Manager Services.
Determination and operational strength are both essential factors for growth in asset management. I'm Steve Meyer, President, Head of SEI's Investment Manager Services Division. We know that disruptive forces create opportunities around the world. If you see potential in change, our industry specialists will maximize SEI's integrated platform of data and risk management, global investment operations, compliance support, and investor services to position your asset management business for success. Come grow with us.
With SEI Investment Manager Services, you lead the charge in a competitive marketplace. Learn more at SEIC.com/seize change.
Business is constantly evolving. Is your financial printer evolving to keep ahead of the curve? At Command Financial, we are redefining financial printing by providing industry-leading expertise, leveraging technology, and honing processes and best practices. Every day, Command helps SEC registrants, as well as members of their working groups, including securities attorneys and investment bankers, prepare, file, and disseminate regulatory and disclosure documents, such as registration statements, M&A documents, and mutual fund prospectuses and reports. Command provides a full range of services to help you effectively complete your deal, meet your disclosure requirements, and achieve your shareholder communications objectives. Visit our website at commandfinancial.com and learn how we're evolving, not only with the times, but also with your business requirements. Command Financial, redefining financial printing.
This is for the friendships, for the fresh air, for the space to grow, for the knowledge, for the sport, for the outdoor education, for the wide horizons, for the academic excellence, for the future. Unleash your child's education at West Buckland School, a co-educational day and boarding school in beautiful North Devon. If you're moving to the southwest for a better quality of life, this is education without compromise, in what the Good Schools Guide called a gem of a school in an exceptional location. To see for yourself, find us at westbuckland.com.
Hi, I'm Dan from NatWest Manchester branch. We know life's hard right now, but if coronavirus has affected your finances, we're doing our best to make things easier. If you're a personal customer, you can request a 3-month payment break if you're struggling with your mortgage, loan or credit card. Or if you need help with an existing arranged overdraft, you could get £500 interest-free for 3 months. Remember, every one of us is here to support you. There are lots of ways we could help. Search NatWest Coronavirus.
Eligibility and conditions apply to payment breaks. Overdraft up to your agreed limit if lower than £500.
This is a message from the government about the next stage of controlling coronavirus with NHS Test and Trace. To protect your friends and family, testing and tracing must become a new way of life. If you have symptoms, you need to get a test immediately. Don't leave home for any other reason. If you test positive, we will contact you to trace people who you might have infected. From now on, if you're told you've been exposed to an infected person, you must self-isolate for 14 days. Play your part and do the right thing so we can safely return to a more normal life. Go to nhs.uk or call 119. Stay alert. Control the virus. Save lives.
Broadcasting live from the Bloomberg Interactive Brokers Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119 and around the globe. The Bloomberg Business app and BloombergRadio.com. This is Bloomberg Surveillance.
Good morning. I'm Karen Moscow, along with Tom Keene and Paul Sweeney, and the opening bell brought to you by SEI. Visionary asset managers find opportunity where others are challenged. Exploit disruption's potential with SEI's global operating platform. Find out how at SEIC.com/IMS. The S&P 500 is higher at the open, up 0.1% or 4 points at 3212. The Dow Jones Industrial Average is little change, down 16 at 27,254, and the Nasdaq's up 0.6% or 62 points at it's at 10,017 right now. The 10-year Treasury is up 9/30 seconds. The yield 0.79%. The yield on the 2-year 0.18%. NYMEX crude oil is down 1.8% on 68 cents at 38.26 a barrel. COMEX gold is up 0.6%, up $9.40 at 17.3130 an ounce. The euro 1.1377 against the dollar, and the yen 107.35. Yeah, and again, Tom and Paul, the Nasdaq is at 10,020. Up 0.7%.
Yeah, big move, 0.7%. Maybe not like futures earlier, but nevertheless impressive move. 2 mergers of note. Oliver Chan, writing for Cowen, sets up the probabilities of Tiffany and LVMH getting together and staying together through that merger. I'll let him describe that, but nevertheless, he believes that merger will go forward. Here's one that will not. Simon Property, they terminate their merger pact with Taubman Centers. Paul, this is a huge deal. Taubman down 38%, 38% right now, and this was within the contractual rights. So I guess it's not a surprise, but nevertheless, these are the surprises to come, isn't it?
It really is, Tom. I think, people, we had some M&A deals done pre-pandemic, and now, a lot of management teams are looking at them saying, do I want to take on this debt? Do I want to take on this operational integration things? And in this environment, I think a lot of folks are really rethinking some of the deals that were negotiated pre-pandemic.
Right now, we continue forward on EM. In the last 24 hours, folks, I have looked at a little bit of the pandemic dynamics of Western India, including Mumbai, which is grim, and also through the great work of Johns Hopkins University and the Financial Times, looking at what has occurred in South America and Latin America. And Chile is the most frightening line, Paul, on any of these charts. Chile takes the trophy, is the absolute worst on a per capita basis. On EM right now, Damian Sassower of Bloomberg Intelligence and Markets. Damian, the state of South America, I know it's not holistic. Each of them has a story, but it seems country to country, am I right to say it's unraveling?
I mean, unraveling is a very strong word. I think every market, as you rightly point out, is different. I mean, Chile, a lot of the risk has already been priced in, Tom, since the riots that occurred last year. But, you're absolutely right. If you want to look for, things to talk about, look no further than Argentina, because the nationalization of crop trader Vicentin is certainly something that caught a lot of people's attention this week, given where Argentina is in its restructuring.
I mean, they're getting fairly high marks for their pandemic management as well. Do guys like you, you get your 3 Bloombergs, your 12 screens, do guys like you even filter in an analysis of this pandemic and the way it's hitting the developing economies, or are you removed from that?
No, well, of course you have to do that, but it's very difficult to model. So, I think it's more instructive at least to look at, what risk markets are pricing in. By risk, I mean, the volatility markets, because, the largest users of them are the large institutions that need to hedge, risk across various different borders. And so, it's interesting for me because I look at it across all markets, not just emerging markets, just to see where we stack up. And if you look back over the last 10 years, Tom, it's pretty interesting. I mean, you see that vols are, just extremely cheap in the euro, which seems to be turning here. Places like the Swissy and the yen, obviously, due to their safe haven status. But it doesn't go for all parties, because if you look at gold, vols are very rich. If you look at IG credit, if you look at the NASDAQ, you've been talking about it all morning, vols are rich. So, depending upon your outlook going forward, is it better to take advantage of high volatility by selling optionality or not? And in EM, the same thing goes. We've seen a huge rally in EM equities over the past month alone. I think we're up nearly 20%. Certainly up 19% this quarter since April. So, just some of these moves are staggering. Look no further than the Real, up 20% in the last month, Tom.
Yeah, so, Damian, what's driving that? It's just, I would not have seen that, which is why I don't play in emerging markets. I would not have seen that rally, Damian. But is it predicated on people are looking past the near-term negative issues as it relates to the pandemic and the economic fallout, and they're really looking to the other side?
Absolutely not. I think what it means, Paul, quite frankly, is the price of financial assets is directly tied to, this is Fed Wednesday, it's tied to the Fed stimulus, so forget about what's going on in the real economy, because the dislocation is evident, right? So to your point, but I think, it's going to be about, Chair Powell and the forward guidance, and this could be the lowest ever long-run dot pot if they fall today. So, those are the things that I think are driving asset prices and driving some of these moves in EM.
Tom, I don't get it. I can't imagine some of these emerging markets, currencies and markets rallying like they have been in the face of what the headlines, at least that I read.
Fine, but Damian just bought that 10,000-acre ranch out in Colorado off the Real play. Damian, part of this was a Real priced for failure, and I guess you call it a dead cat bounce. Okay, great. The easy money's been made. What's the now what on something like the Brazilian Real? Is it playable now, or do pros like you just step aside after all this easy money was made?
Oh, it was playable before, Tom. These are the moves for men. But, you have to understand these markets don't have the type of liquidity we find here in U.S. equity markets alone, right? So, it doesn't take a whole hell of a lot to move them. So if I, climb off my saddle here on the ranch, and I take a look at some of these markets, and you look at the rand and you look at the peso, they're all very beta correlated. They're all snapping back because, a lot of the selling pressure was overdone. And so, it's it's kind of expected as you see vol curves normalize, firm structure, level, trend, all of these things we talk about. I mean, my goodness, we saw $1 billion flow into, EMB, the world's largest EM debt ETF here in the U.S. last week alone. That was the largest on record. So these flows are being driven by, your marginal risk taker here in the U.S.
Okay, but this is why we would like to have you on. Besides, you're the guy that bought Hertz at 80 cents per share. Damien, did you just say $1 billion wandered into a silly ETF on EM bond? Where did that money come from, and is it late to the party?
Well, I think what it has to, it came from U.S. investors, and it comes from investors,
investors
getting a little bit more, or rather a little bit less risk averse here in the U.S. and saying, my goodness, look at the way things are. I mean, EMB is rarely down on a year, so to see it down to the extent we had seen it back in April, I mean, it only makes sense that, you've got speculators going in there. I mean, we could talk about speculative interest. I mean, short interest is rising in EMB. I look at these things, Tom. So, there is some risk there. But, the move is staggering, and the flows, I mean, just the liquidity that's being pushed into emerging markets, which, as we know, are liquid, once the money gets over there, it's difficult to get out. So, that's where the risk lies.
It's difficult to get out.
I'm looking at the chart of this thing. Folks, the Bloomberg terminal on your iPhone is an act of God. It's just...
Who did that? Who created that?
I don't know. It's like, me and VetBill are sitting here looking at EMB 108.701, and it's just... Paul, it was down like 5 standard deviations.
Yeah, I don't know where these people come from. I mean, Damien says $1 billion comes in from the U.S. I don't know where that comes from. Eric Balchunas and all those crazy people in the ETF world, I guess. But so, Damien, talk to us a little bit about China here. It's kind of been on the back burner. What are you and the institutional investors that you talk to? How are you kind of framing China over the next 6 to 12 months?
Yeah, I mean, it's interesting, right? I mean, very difficult to model, but certainly the lights are going back on. I think you have to look at the high-frequency data out of South Korea and Taiwan, and to a lesser extent Japan, to really get a sense on, the pace and the speed with... I mean, look, are we returning to a pre-COVID level? Absolutely not. But are we going to return to pre-COVID trends? Perhaps, and I think that's what markets are coming to grip with. Certainly that's what emerging markets are coming to grips with as respect to China, Paul. So, what does that mean? I mean, we are seeing trade improving. We are seeing, fundamentals there. They are not stimulating to the extent they once did. So, markets are now getting a little bit more comfortable with the lack of stimulus domestically. But whether or not that raises risks going forward remains to be seen. I mean, right now it's proving to be the right strategy because on a rate differential perspective, wow, you can clip some higher coupons out in China if you had the veracity to go out there. So, I think that's what's going to drive things rate differential.
I know you're doing cattle breeding on the ranch, Damien, and, I guess it's Swiss cows mating with the Canadian Angus cows. I don't know what you're doing out there, but unfortunately, Damien, we got to take you off the ranch every once in a while because I actually learn something when you come on. It's Paul, don't...
Every time.
I had no idea about EMB, but... I'm in the triple leveraged all cash fund. What do I know? Damien Sassower, making us smarter with Bloomberg Intelligence this morning. With our news, she is in Washington. Here's Amy Morris.
Thank you, Tom. U.S. coronavirus cases are slowing as data shows infections rising at the lowest rate since March. In parts of California and Texas, hospitalizations are spiking. Many of the recent cases have been linked to loosened restrictions. Annie Pekos is professor of molecular microbiology and immunology at the Johns Hopkins Bloomberg School of Public Health.
We expected to see a slight spike as we released some of these public health interventions. The important thing now is to make sure that doesn't sort of turn into an exponential growth. A small spike is important. We can adjust some of the public health interventions to try to keep that down. We don't want to see a rapid increase in cases.
The Trump administration, meanwhile, has used the coronavirus health emergency to expel migrants at the border without allowing them to apply for asylum. That administration now facing its first court challenge over the practice in a lawsuit filed on behalf of a 16-year-old boy who came to the U.S. from Honduras to live with his father. The brother of George Floyd, whose death in Minneapolis sparked the protests seen around the world, is one of 12 guests who will speak to lawmakers today as the House Judiciary Committee takes on both racial injustice and police violence. Republicans have tentatively settled on moving the party's national convention to Jacksonville, Florida. Sources tell Bloomberg News convention planners aren't sure yet if Jacksonville has enough hotel rooms to host the event in August. Lower profile meetings would still be held in Charlotte, North Carolina. Global news 24 hours a day on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Amy Morris. This is Bloomberg. Tom and Paul.
Amy, thanks so much. Paul, can you tell me when it's okay to be safe and like buy Apple or Amazon or all these?
I think you need to go in those emerging markets ETFs, Tom. I mean, get out of the triple leverage all cash fund. Skip go and just go right into emerging markets.
I mean, are we starting to talk about when these things become $2 trillion entities?
Yeah, it's extraordinary.
We're not on the $2 trillion watch, are we?
No, I mean the $1 trillion number, Tom. You think about Apple, you think about Amazon, some of these other names. It's just extraordinary, and it kind of goes to you talk to strategists or you talk to money managers like Barry Ritholtz. I often ask the question, is it concerning that you only got roughly a handful of names kind of really driving this market? The breadth doesn't seem to be there, but that's kind of the world we're living in right now. Investors in this time of uncertainty, Tom, are really just focusing on the companies that deliver that top line growth consistently, with or without a pandemic, and those are the ones that are getting the attention right here.
You can see it with red on the screen down, -130, SPX. -3, barely, I'm going to call that unchanged.
Yep.
And there's the NASDAQ 100. I don't have in front of me, Paul, the percentage that those 7 or 8 stocks are of the NASDAQ 100, or for that matter, the S&P 500, but it's got to be well over 20%. I mean, it's, it's just amazing. NASDAQ 100 up 0.9% now, 93 points. It's extraordinary. The VIX flat, 27.69 as well. I do want to draw your attention on this Fed Day to our coverage, and that will be wrapped around the bond market. Yields are in nicely over the last number of days. We had 0.92% of the 10-year. That is reversed to 0.80. We're in 12 basis points just over the last 2 or 3 days. Gold, $17.28 the ounce. Thank you to Jeffrey Curry of Goldman Sachs for conversation earlier this morning. Stay with us worldwide. This is Bloomberg Radio.
This is a Bloomberg Pursuits look at luxury. Las Vegas casinos have reopened with $30 a night rooms on the Strip. And in a typical Vegas way, that meant go-go dancers and masks, even if patrons weren't much wearing them. The Nevada Gaming Control Board said resorts should operate at no more than 50% capacity on their gambling floors. Some casinos opened with sneeze guards around their card tables, and hand-washing stations have been interspersed among slot machines. It should be no surprise that a company whose sales are generated by literal sparkle inside a luxurious store would have no sparkle in sales during a pandemic with stores closed. Tiffany has posted a loss for last quarter with sales far below forecasts. If you'd like an international vacation with no quarantine, that'll cost you $115. Iceland is giving arriving passengers a choice between a 2-week mandatory quarantine or paying for an on-the-spot COVID-19 test. Tourism accounts for almost half of Iceland's export revenue. Visit BloombergPursuits.com for more. I'm Andrew O'Day, Bloomberg Radio.
What's the true value of your custodial relationship? Ben Harrison of BNY Mellon's Pershing explains.
As sophisticated investors demand more from their advisors, advisory firms, in turn, need to rely on their custodian to help them grow their complex businesses. At BNY Mellon's Pershing, supporting the rapid growth of RIAs is our #1 priority. We understand what it means to deliver true value to our clients who are looking for a custodian that is aligned with their best interest and delivers high-value solutions, all in an open architecture environment with flexibility, choice, and transparency. Learn why so many of the largest advisory firms turn to us for the financial strength, resiliency, and high-touch service that BNY Mellon Pershing provides. When you work with Pershing, we put your business first. Can your custodian say that?
Learn more at Pershing.com or call 800-445-4467. Pershing Advisor Solutions, LLC. Member FINRA SIPC.
Global News.
So I often struggled at school. Once, when we had a maths test, I looked around the room and everyone was just doing it. And I couldn't. And I began to cry. But my teacher came over and said, it might look like one big problem, but it's just a handful of small ones. And you can deal with that. I hear her voice in my head for every problem I face to this day.
Teaching. Every lesson shapes a life. You could get £26,000 tax-free to train as a teacher. Subject to eligibility, selected subjects only. Search Get Into Teaching.
We've got a lot of catching up to do.
Hi there, everybody. Lovely to be with you again.
Over 100 live games in just 6 weeks on Sky Sports. Everything still to play for. Scores to sell. Relegation to avoid. Europe up for grabs. And the titles to win. Upgrade to Sky Sports today. 64 Premier League and 37 EFL games on Sky Sports, 17th of June till 26th of July. Requires Sky Sports Premier League and football packs. See sky.com/sports for details.
Want to relive the glory of college football?
Balls over a man, into the end zone.
Come explore TuneIn's classic game replay collection to hear ESPN's complete coverage of the 2019 New Year's 6 bowl games. Don't miss your chance to re-experience the Rose Bowl, the 2020 National Championship, featuring Clemson and LSU.
There are going to be 2 champions on the field tomorrow night. There's going to be 1 team hold up the trophy.
To the 5! Touchdown! Search Classic Game Replays to listen for free.
24 hours a day at Bloomberg.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
And I'm Karen Moscow, and U.S. stocks are lower as investors await reassurance on the Federal Reserve's willingness to keep providing extraordinary support for the economy. The dollar is falling, Treasury is climbing. We check the markets every 15 minutes throughout the trading day on Bloomberg. The S&P 500 down about 0.2%, down 5 points at 3202. The Dow Jones Industrial Average down 0.5% or 143 points at 27,124. And the Nasdaq is up 0.4% or 43 points at 99.95. 10-year Treasury up 9/32, yield 0.79%. The yield on the 2-year 0.18%. NYMEX crude oil's down 2%, down 80 cents at 38.14 a barrel. And COMEX gold is up 0.5% or $8.60 at 17.30.40 an ounce. The euro is at 1.1363 against the dollar. The yen 107.29. Today's main event for investors is a policy decision from the Federal Reserve. That's after a better-than-expected May jobs report last week. Neil Dutta is head of U.S. economic research for Renaissance Macro.
There's absolutely no reason whatsoever for them to sound upbeat. I mean, inflation is low. Risk management suggests you take a more of a cautious approach. You sort of err on the side of doing more. So I think while we've seen some tentative signs of improvement, the Fed's not even close to declaring victory. And, I think what we're going to see today is, them continuing to sort of signal that they're going to anchor the front end of the yield curve and keep rates low for a long while.
And Neil Dutta has heard earlier on Bloomberg Radio. Watching shares of Taubman Centers, they're down about, 24% right now. Simon Property Group has withdrawn its $3.6 billion bid to buy the rival mall owner. And that's a Bloomberg Business Flash. Tom and Paul.
Karen, thanks so much. One of the great truisms, folks, and this is before the internet, before the revolution of the Bloomberg terminal and such, is the way that you became educated in economics, finance, and investment is, you'd go to courses and you'd take mail order courses and you'd go to school and all that. And one of the great ways you would get smarter at foreign exchange is on the inside of matchbox covers. These matches, if you had a cigar or whatever, you would like you'd have with Vince Signorella, you'd have a matchbox cover and you'd open it up and it'd be an ad for the Signorella School of Foreign Exchange. And I took the course once, and I'm thrilled that Vince Signorella could join us now from Bloomberg Markets to talk about the lessons learned. Vince, in one of your first lessons, you said the only way to learn that you can't guess the Fed meeting is to enjoy losing money making a bet before the Fed meeting. And I went out and did that. What's the worst, Vince? What's the worst you've ever lost trying to bet the Fed?
Actually, the worst I ever lost was trying to bet the BOJ.
Okay, I'll take that as an audible.
They have a resilience that is beyond compare, trust me. And they somehow get all of their large banks to follow suit. So when you go up against the BOJ, it's like going against the entire army. It's not a lot of fun, trust me. It's a very poor situation.
This is such a lesson, folks. Vince, in the new Fed, with all this hyper communication, and as someone said brilliantly today, Jerome Powell, as Tom Perselli of RBC, Jerome Powell is speaking every day, so there's like a Fed meeting every day. Can you game the meeting anymore?
I think what you gain is what the expectations of traders are going into it, and you could potentially gain it from playing the other side of it a bit. The expectations going into this, I think, are somewhat misplaced. I mean, you see the markets lower today, and that's probably because all the dentists have gone back to work and sold their retail positions.
Be nice. 104% of our listening audience badly needs to go to the dentist after this pandemic.
I actually have an appointment today later on. So my guy's back to work. I think there's this expectation that the Fed is going to be a little bit upbeat today, that they're going to give us guidance. I honestly just don't see where that comes from. They'll repeat their full range of tools. Obviously, no change in rates. If they guide, it's going to be soft, and it's going to be very optimistic from a standpoint of lower for longer, but not optimistic in terms of the economy. One twist, which may be good for equities, and though I don't think, and I think the market's right on this one, I don't think we see negative rates at any time soon, but we could see the dot plot show some negative dots. And in that sense, I think the market will like it because they'll just see the Fed adding liquidity for much, much longer perhaps than anticipated.
Vince, give us a sense here. I mean, as you talk to traders out there, do they have a feel that, you think about the risk assets out there, investors may be a little bit ahead of themselves given kind of the economic backdrop that we're experiencing here? We've seen, risk assets really rally off the bottom here.
Yeah, I think some of the risk assets that people are jumping in, and one of the phenomenons that we're seeing is this buying up of companies that have declared bankruptcy. Hertz being just off the top of my head, and also from the risk space of buying up some of the emerging market currencies that still face substantial hurdles, like the Brazilian real, which still hasn't really, I think, felt the full test of the virus. So there are definitely areas and pockets where people are getting ahead, and you might also say maybe even in the tech space that people might be getting a bit ahead of that, because if we do go back to work and the market does turn back to something close to normal, well, then tech may have run a little bit of its course at this point.
Yeah, it's interesting, Vince. We just had Damien Sassow from Bloomberg Intelligence on talking about emerging markets, and he was kind of saying, hey, it's just kind of emerging market investors are just kind of looking at the Fed, and the Fed is just open money, free money, and that's kind of what's pushing this market.
Yeah, no, I mean, that really is. There are two things you have going. One is the Fed has basically said lower for longer. They're going to provide as much liquidity as the market needs. And then you have ECB. You have the Treasury stimulus of $3 trillion with perhaps another trillion. They're filling that gap. And they're going to stay there until earnings turn and income turns and job turns. So there's no way they're going to let that void open and markets sink into it. So they're going to stay there for as long as necessary and stay there longer than probably necessary so that markets can get their rates back under them again. And that's what people are betting on.
The longer, I think, has just been dead on. Vince Signorello with us, folks, on foreign exchange. Carl Riccadonna has been great on that with Bloomberg Economics, and many others really starting to percolate in. Paul, this whole idea of here in June of 2020, this is the day, this is the moment where the Fed really begins to discuss 2022. It seems ancients away. As a kid, I never even framed 2022.
2022. I don't even know where to put that.
That was like, science fiction.
Exactly right, Buck Rogers. I mean, I think, the issue here is, we've seen the Fed come in, Tom, pretty aggressively here since the beginning of this pandemic. What else is in their toolbox here? I think they're going to once again call for some fiscal stimulus as well.
Well, they may. I think he's going to finesse it with calm and control, but at some point here, I know Michael McKee will have great coverage of how we get out to 2022. And, of course, that'll be our coverage. Stay with us on Bloomberg Radio, Bloomberg Television for Fed coverage today, near 2 p.m. Worldwide, this is Bloomberg. Good morning.
This is a message from the government about the next stage of controlling coronavirus with NHS Test and Trace. To protect your friends and family, testing and tracing must become a new way of life. If you have symptoms, you need to get a test immediately. Don't leave home for any other reason. If you test positive, we will contact you to trace people who you might have infected. From now on, if you're told you've been exposed to an infected person, you must self-isolate for 14 days. Play your part and do the right thing so we can safely return to a more normal life. Go to nhs.uk or call 119. Stay alert. Control the virus. Save lives.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
With the NHL season temporarily on ice, now is a good time to catch up on past games.
Bergeron, he scores!
With game replay on TuneIn, you can listen to every power play, slap shot, and goal of the 2019-2020 season so far.
Suter to Cunnin to Fiala, he scores!
And for a limited time, it's free for hockey fans everywhere. Search classic game replays to start listening.
Who says you can't have a laugh while getting serious about America's pastime? On the daily podcast Locked On MLB, comedian and baseball fanatic Paul Francis Sullivan talks about each team, each pennant race, and everything else in the game, from rule changes and controversies to baseball cards and stadium food.
For those of you who are not familiar with me or the old show, I love to obsess over baseball. I'm talking baseball over the Super Bowl. We had a TV showing the division series during my wedding.
Search Locked On MLB on TuneIn to listen today.
In case you didn't know, TuneIn lets you listen to the same radio stations you pick up on your home or car radio, except you can hear them from anywhere. If you want to find a station from somewhere else in the world, navigate to the By Location section under Browse. Keep exploring with TuneIn.
With millions of podcasts dropping new episodes all the time, how do you keep up with all your favorites? TuneIn makes it easy. Simply head to the home screen and find your new episode section to see the latest additions.
Where do sports, culture, and basketball nostalgia collide? On their podcast, Knuckleheads, NBA veterans Quentin Richardson and Darius Miles sit down with athletes, musicians, and entertainers to get brutally honest, totally unguarded conversations about everything, from current events to untold stories from the golden era of sports.
Shaquille O'Neal. You know that, right? I tried to tip dunk all the free throw line one time.
Search Knuckleheads on TuneIn to listen.
Want to relive the glory of college football?
Balls over a man, into the end zone.
Come explore TuneIn's classic game replay collection to hear ESPN's complete coverage of the 2019 New Year's 6 bowl games. Don't miss your chance to re-experience the Rose Bowl, the 2020 National Championship, featuring Clemson and LSU.
There's going to be 2 champions on the field tomorrow night. There's going to be 1 team hold up the trophy.
10, plays to the 5, touchdown!
Search classic game replays to listen for free.
24 hours a day at Bloomberg.com, on the Bloomberg Business app, and on Quick Take by Bloomberg. This is Bloomberg Radio. This is Bloomberg Markets with Bonnie Quinn and Paul Sweeney.
The Fed action, essentially unlimited quantitative easing.
Companies taking aim at coronavirus vaccines and other treatments.
This could be a lower for longer hit.
Market sell-off glowing global once again.
Breaking market news and insight from Bloomberg experts.
It's possible that this is going to be a scarring recession. The Fed is really showing that they're doing whatever it takes.
A lot of people don't expect that the economy will reopen in full.
This is really hitting industrial America, and it's a major crisis.
This is Bloomberg Markets with Bonnie Quinn and Paul Sweeney on Bloomberg Radio.
Good Wednesday morning from New York City and points beyond to our worldwide audience. Coming up, we're going to chat with Constance Hunter, chief economist at KPMG. We're going to get her thoughts on what she expects from the Fed chairman later this afternoon. Plus, we're going to take a look at the election coming up in November. It should be a contested one. We'll have some details there. But first, let's go to Greg Jarrett of Bloomberg News for a Bloomberg Business Flash. Greg.
Ball stocks are just a bit lower as investors are waiting for reassurance on the Federal Reserve's willingness to keep providing extraordinary support for the economy. The dollar's down and treasuries are up. As I say, today's main event for investors is a policy decision from the Federal Reserve. That's after a better-than-expected May jobs report last week. Neil Dutta, head of U.S. economic research for Renaissance Macro.
There's absolutely no reason whatsoever for them to sound upbeat. I mean, inflation is low. Risk management suggests you take a more of a cautious approach, you sort of err on the side of doing more. So I think while we've seen some tentative signs of improvement, the Fed's not even close to declaring victory. And, I think what we're going to see today is, them continuing to sort of signal that they're going to anchor the front end of the yield curve and keep rates low for a long while.
We check the markets every 15 minutes throughout the trading day on Bloomberg Radio. S&P 500's down 0.1%, down 4. The Dow's down 0.5%, down 142, and the Nasdaq is up 0.7%, up 66. The 10-year is up 9/32. The yield is 0.79%. West Texas Intermediate crude's down 1.9% at 38.22 a barrel. COMEX gold is up 0.5% at 17.2970 an ounce. The dollar yen 107.33. The euro $1.1364, and the British pound $1.2749. That's a Bloomberg Business Flash. Bloomberg Markets is underway. Bonnie Quinn and Paul Sweeney.
Great, Jared. Thank you so much. We appreciate that. Market Drivers is brought to you by Commonwealth Financial Network. For the sixth straight time, J.D. Power ranks Commonwealth #1 in independent advisor satisfaction among financial investment firms. Visit commonwealth.com to learn more. Looking at the markets here, as Greg was just mentioning, we're kind of a mix. S&P down slightly, Dow down 150 points, but the Nasdaq is higher. To get a sense of what's really going on and how we should be thinking about these equity markets going forward in the face of this global pandemic, we welcome our good friend Gina Martin-Adams. She's an equity strategist for Bloomberg Intelligence. Gina, thanks so much for joining us here. Give us your sense here of kind of how you're viewing the markets here after this nice bounce off the lows that we've seen in the equity markets. How are you kind of taking a look at the next 12 months for the equity markets?
Yeah, so when we think about where equity markets are, the bounce, in our view, has been entirely driven by policy infusion, much lower rates for a longer period of time, a commitment by the Fed to at least double the size of the balance sheet and purchase many, many assets across the bond market spectrum has certainly elevated valuations in equities. But we've now effectively priced that policy infusion in. So we're waiting for our next leg higher. And I do think that's why you're seeing the market sort of take a pause here, rotate back into some longer-term winners. And I do think we're in for a period of maybe a rockier climb as we move into more of a show-me market. And by that I mean we're going to have to see the economic data continue to improve, maybe a little upward revision momentum emerge in the earnings expectation stream to really drive performance from here. So we've gone from policy-driven market to what's likely to be more of an economically and earnings-driven market over the next several months in our view.
Yeah, just as you talk about that, we're seeing the FANGs higher today, which again shows the Nasdaq up 0.2% while the other indices are lower. But Gina, not by very much. And if you say we're going back to the fundamentals, what does an improvement look like? Because we're looking at seriously negative numbers, particularly for earnings next quarter.
We are, but the expectation is for that negativity to persist. And I think that's an important point to make. If you look at your average recovery following recession lows, you typically get a 10% growth pace in EPS following those lows and the year after those lows. So 10% is your average. We're baking in a 5% expectation in terms of our forecast for where the S&P 500 is most likely to go. The consensus expects only 1.5% growth. So I think this is an important thing to keep in mind is there's no implied expectation for recovery really in the earnings stream in terms of consensus expectations. I would argue the market is probably pricing in about 2% growth following our second quarter trough. So that's why we're so sensitive to what happens with the pace of economic growth and earnings recovery. Yes, the current economic numbers look bad, but they are getting less bad. As long as they continue to get less bad and start to migrate to potentially growth, we're more likely to see revision momentum revert higher. We're more likely to see earnings beat expectations, and that's going to keep the market most likely moving higher, albeit certainly not at the double-digit pace of monthly growth that we've experienced most recently. It'll most likely be a rockier climb because it's driven more by improving earnings expectations and improving economic outlook, which by its very nature is much more a more difficult portion of the equity market climb than the pure valuation expansion driven portion that we've just been through.
So, Gina, we've had the Fed kind of come out, since the beginning of this pandemic and be, quite aggressive, quite forthright in kind of their views of how they need to stimulate the market and add to liquidity in the market. fiscal stimulus is kind of taking a back seat here. Does the market need to see another big round of fiscal stimulus here, or is that not a prerequisite for the support of this market right here?
I think it'll entirely depend upon the pace of economic recovery. I mean, I think we can all admit that we were very shocked by the pace of employment recovery recorded in the month of May. Just on a couple of weeks of reopening, to see that kind of employment growth, there's a lot of skepticism as to whether it will continue. But if it does continue into June, I think the fiscal bodies are going to really start to question how much spending they need to do, how much stimulus they need to do. At the same time, you've got a lot of fear out there that we're going to have another reinfection wave, that we're going to experience some, sort of greater shutdown come winter months. And so I think that they want to reserve some firepower in the event that we do see some sort of reinfection going forward. Not to mention the fiscal budget is not exactly sanguine at this moment in time. We've certainly accumulated a tremendous fiscal deficit. So I think they're going to be somewhat conservative, certainly follow the data. I think in certain cases there's enough political momentum, such as the extension of unemployment benefits, to probably get something through. But we're unlikely to see a massive bazooka package like we saw in the spring, simply because we do appear to be pushing past the worst of the worst. Mm-hmm. And as long as we're going to continue to see some incremental improvement in economic growth, your case for extraordinary fiscal expenditure in that kind of environment is diminished somewhat. And the equity market is not necessarily counting on it. With 1.5% growth forecast for earnings over the next 12 months, the equity market is essentially just saying, hey, we're going to have incremental improvement in the economy. I would say another fiscal package is likely to provide a big boost.
Gina, very briefly, what do you make of the distressed equity investing that we're seeing right now? Hertz, Chesapeake, JCPenney?
Yeah, I think it's just a risk tolerance move. I do think that what's happening in general is an improvement in risk tolerance. Investors are willing to go out the curve in terms of lower quality investments, higher volatility investments. That's very symptomatic of sort of recession lows, very consistent with experience of the past. I wouldn't call it necessarily taking a flyer, but certainly finding those potential opportunities where we've seen extraordinary dislocation and maybe some mispricing in the market is definitely the risk appetite of the day.
All right, Gina, thank you. I have to leave it there. Gina Martin-Adams, Bloomberg Intelligence Chief Equity Strategist, thank you for that. And just as we talk about the equity markets, I do want to bring you a couple of pieces of news. Uber tumbling, it's about 6% lower now. A report saying it's close to ending merger talks with Grubhub. And on that, we're looking at another company, Takeaway, also looking at the Grubhub deal, and it's down 7.2%, and that's a Dow Jones report. So we will continue to follow the equity markets. Now let's head, though, to our 99.1 studios in Washington, D.C., to Nathan Hager for world and national headlines. Nathan.
Good morning, Bonnie. A hearing is getting underway now in the House Judiciary Committee on police reform in the wake of George Floyd's death. About a dozen witnesses are set to testify, including Floyd's brother. At the funeral in Houston yesterday, Philanese Floyd said George will change the world.
I want justice for my brother. My big brother. That's Big Floyd. Everybody knows who Big Floyd is now.
In his prepared testimony, Philanese Floyd will ask lawmakers to make positive change and to make sure his brother's death wasn't in vain. The House, Democrats there considering a broad array of reforms, including a ban on chokeholds and a national registry of brutality incidents. Senate Republicans, led by their lone black member, Tim Scott, are considering things like better bias training and enacting a federal anti-lynching law. At least 9 states have seen a spike in coronavirus-related trips to the hospital since Memorial Day, as people headed to the beach and out to the streets for protests. Arizona and Texas have seen record numbers of people needing inpatient care. Andy Pekos is a microbiologist at the Johns Hopkins Bloomberg School of Public Health.
We expected to see a slight spike as we released some of these public health interventions. The important thing now is to make sure that that doesn't sort of turn into an exponential growth.
Pekos was on Bloomberg Daybreak. At a biotech conference yesterday, Dr. Anthony Fauci called the coronavirus pandemic his worst nightmare. Republicans are likely to move at least part of their convention next month to Jacksonville, Florida. That's after they failed to reach an agreement with the original host, Charlotte, North Carolina, on the scope of coronavirus safety measures. Sources tell Bloomberg the convention's lower-profile meetings could still happen in Charlotte, but the marquee event, President Trump's acceptance speech, will be held in Florida. Global news, 24 hours a day on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries.
Market upheavals.
The narrative is driven by uncertainty about the virus.
Political reversals.
It's not clear that some of the Republicans up on the Hill are agreed with the Republican White House.
Economic shifts.
The macro clearly being driven by the coronavirus outbreak.
Everything seems to be in motion.
Will it also mean a global recession in your view now?
But here, you're on solid ground.
Looking forward to guiding you through all of this.
Bloomberg Radio, the Bloomberg Business app, and BloombergRadio.com. Bloomberg, the world is listening.
There are everyday actions to help prevent the spread of respiratory diseases. Wash your hands. Avoid close contact with people who are sick. Avoid touching your eyes, nose, and mouth. Stay home when you are sick. Cover your cough or sneeze. Clean and disinfect frequently touched objects with household cleaning spray. For more information, visit cdc.gov/COVID-19. This message brought to you by the National Association of Broadcasters and this station.
At Bloomberg, we know a lot of financial experts.
He's a former president of the European Central Bank.
Your Global Financial Warriors is a classic textbook.
A lot of political experts.
If you were advising the President of the United States, what's the thing that he's not doing that he should do?
And lucky for you, we know a lot of science experts, too.
You talked about those reagents which are necessary for the testing.
It's also the behavioral psychological approach.
Bloomberg Radio, the Bloomberg Business app, and BloombergRadio.com. Bloomberg, the world is listening.
The average time a resume spends on an HR manager's desk is 7 seconds, and most of them are tossed aside. Now imagine if one of those resumes belonged to Yasmin, who was
living in a shelter, juggling 3 jobs. I had to be resilient. That's something that you can't teach.
We rely so much on a resume, yet it could never tell the full story of someone who
had to be independent and take initiative, and that's how I handle every project I get.
Discover new ways to develop great talent at gradsoflife.org. Brought to you by Grads of Life and the Ad Council.
You know that feeling when you get more than you expected? Like discovering that the box of chocolates has a whole other layer underneath, or scoring extra poppadoms with your takeaway, or joining Tesco Mobile and finding out you get the latest phones and 99% UK network coverage. Yeah, that moment feels good, right? Tesco Mobile. Every little helps.
99% 4G population coverage indoors and outdoors across UK.
We're all having to get used to the new normal, and at Birkbeck University, we're experts at being adaptable. As London's evening university, we've been flexing around the lives of busy commuters for nearly 200 years. And you can find everything you need to secure your place for autumn online. From expert advice to virtual tours, a live chat with our students and course applications. Make the new normal, studying for the career that you really want. Search Birkbeck, and it's new problem solved.
There's a reason flash storage is called flash storage and not electronic non-volatile computer memory storage. From quick and efficient data retrieval to instant scalability, everything about IBM flash storage is fast. It's also cloud-ready and surprisingly affordable, with a recommended monthly price of £310 for 24 terabytes of all flash. Order by the 30th of June and pay nothing for 90 days. Find out more at ibm.biz/flash offer.
Picture this. Small businesses on eBay are working to
get things moving.
Sending spices to novice cooks.
Airbands to kids. Desks for home offices.
Delivering the goods.
Shipping footballs. Fruit trees.
And dishwashers.
Thousands of small businesses on eBay are helping to keep the nation going. They are individually brilliant, stronger as one. Buy, sell, eBay.
Thanks to National Lottery players, the Emerald Centre are now providing emergency food supplies and support for people in Bedfordshire like Alan. Thank you. And £600 million of National Lottery funding is on its way to thousands more local projects in England and across the UK during these exceptional times.
Thank you.
Thank you. Thank you.
Thank you.
Thank you. The National Lottery. Your numbers make amazing happen.
This is a message from the government about the next stage of controlling coronavirus with NHS Test and Trace. To protect your friends and family, testing and tracing must become a new way of life. If you have symptoms, you need to get a test immediately. Don't leave home for any other reason. If you test positive, we will contact you to trace people who you might have infected. From now on, if you're told you've been exposed to an infected person, you must self-isolate for 14 days. Play your part and do the right thing so we can safely return to a more normal life. Go to nhs.uk or call 119. Stay alert, control the virus, save lives.
Dear Dad, Happy Father's Day. You are my rock, my go-to guy. Whenever I call, you're happy just to listen. You've always been there for me, by my side. I don't know how you put up with my piano playing all those years. Hang on, kiddo. I'll listen in a sec. I miss you. See you soon. Love you lots, Luce. This Father's Day, send love straight to Dad's door with moonpig.com. Download the app today.
With the NHL season temporarily on ice, now is a good time to catch up on past games. With Game Replay on TuneIn, you can hear every matchup of the 2019-2020 season so far. And for a limited time, it's free for hockey fans everywhere. Search classic Game Replays to start listening.
Buckle up, race fans.
NASCAR is back in the driver's seat.
And you can cut straight to the action here.
With the Performance Racing Network on TuneIn, you can hear PRN's live coverage of some of this year's top events.
As NASCAR's top drivers, Kevin Harvick,
Clint Boyer, and more get back on the track.
Search Performance Racing Network to listen and see upcoming races.
News 24 hours a day at Bloomberg.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
Most stocks are falling as investors are waiting for reassurance on the Federal Reserve's willingness to keep providing extraordinary support for the economy. The dollar's down, treasuries are up. The S&P extended losses into day number 2 as a drop in energy producers offset gains in tech shares. We check those markets every 15 minutes throughout the trading day. S&P is down 0.4%, down 12. The Dow's down 0.9%, down 243. And the NASDAQ is up 0.5%, up 54. The 10 years up 11.30 seconds. The yield 0.78%. West Texas Intermediate crude oil is down 2.25% at 38.07 a barrel, while COMEX gold is up 0.7% at 17.3360 an ounce. The dollar yen is at 107.24. The euro at $1.1367, and the British pound $1.2760. Citing sources, Dow Jones reports JustEatTakeaway.com is nearing an all-stock deal for Grubhub. Deal could be announced as soon as today. Earlier, CNBC had reported that Uber is close to pulling out of a merger with Grubhub over antitrust concerns raised over a possible deal. Uber is down 5.3%. That is a Bloomberg Business Flash. I'm Gordon Jarrett.
This is Bloomberg Markets with Paul Sweeney and Bonnie Quinn on Bloomberg Radio.
We obviously got a raft of economic data this morning, and of course we're waiting for the Fed statement at 2 p.m. Eastern and a news conference after that. But just to give you a quick rundown of the economic data, we had mortgage applications coming in up 9.3% to the week ending June 5th, but we also had CPI data, inflation data, that was minus 0.1% month over month, ex-food and energy minus 0.1%. So let's bring in Constance Hunter now to tell us what this all means for the economy going forward. Constance Hunter is Chief Economist at KPMG. Constance, thanks for joining. Obviously, we were looking for a softening in the CPI data. Are you surprised it's not even lower?
Well, no, because there's certain factors that are keeping overall CPI boosted, the most important of which is food at home, which we see rising, and it's up by 4.8%. If we dig down deeper, for example, and just look at meat prices, we see that rising over 8% year over year, or just about 8% year over year. So because of that, we're keeping the CPI boosted. But if you look at all of the corresponding data, for example, we saw a surge in the savings rate. There was credit card data released this morning that showed a sharp decline in April, and then a less of a decline in May. So it'll be really interesting to see what happens to CPI next month, to see if this is a sudden downdraft that gets pulled back up, or if the lack of demand continues to show itself in CPI going forward. I think that is the real question.
Constance, what do you expect to hear from the Federal Reserve today? The Fed's been, by most accounts, pretty aggressive, pretty out in front of this issue in terms of injecting liquidity in the marketplace. What do you expect to hear from them?
Well, one of the things that they have been talking about, and which has been in their statements, is this adherence to symmetry with regard to their inflation target, which effectively means that they're willing to withstand some inflation above the target for a period of time to make up for the long periods of time where inflation has been below the target. And I always watch to see if symmetry is still part of their conversation, because right now it is really difficult for me to imagine inflation above the target of 2% for a long period of time for many, many years. And so that'll be something that I'm really watching for. Another thing that everybody is watching for is what are they going to do to stop the market from really thinking that negative rates are an option if the Fed truly believes they're not an option, which they have said they're not. And one of the ways that people expect the Fed to sort of counteract that